Hello and welcome. You're watching India Market Open. It's an exciting morning. We've come back to work. Of course, I've come back to work. Good morning, guys. New record highs in the street. It seems like the party is not ending anytime soon. So anybody who was brave enough to be on the wrong side is probably not enjoying this morning.
Where were you, Samina, for 2 weeks?
Yes, I was on holidays, summer holidays. That's what you do when you have children. It was great. Like I keep saying, I've come back refreshed. To say the least.
And to say the least, markets are completely ready to continue the party. 23,700, closing above 23,700 yesterday. Just astonishing. The bank Nifty just revving up to go, and from what kind of data is set up, you're going to see another great day for banks. But it was not a wide kind of a rally, I would say. It's more of the BFSI space. It's more on the Nifty because wider or broader markets were not showing that kind of strength. So that's one thing to remember as well. Are you going to see a wider participation today or not? And just before we get to the global setup, guys, just wanted to point out another big event this morning, which is political but could be interesting to note. You're going to have a historical election for the position of Lok Sabha Speaker. This is only the third time in the history of independent India that you're going to have this kind of an election. Now, why does it matter? It matters because Om Birla, the NDA candidate, is going to win because it's a 50% simple majority election. But if he wins by more than 293, which is what the NDA seats are, that means people from the other side have voted for the NDA candidate. And it's an opportunity for the ruling party and the BJP to show that they have the strength to push through what they want in the House. If that does come through, I would reckon it would be seen as a positive by the market. So just to put that out there, one sort of mid-morning trigger that you could look out for. So that's an important one. It's also a sign of a resurgent opposition that they want to do this election in the first place. So that's the big, I would say, non-business or current affairs sort of cue. In terms of global cues, nothing major. Another day of mixed trade. In the US and a reversal of sorts. So the Dow was down 300 points. The Dow was the one which was bucking the trend for the last couple of sessions. The S&P 500 and NASDAQ actually recovered. Dow futures also negative, mildly negative. And NASDAQ's recovery fueled by Nvidia. So Nvidia is back up 7% in trade after getting drubbed for about 3 trading sessions.
I was about to say that. You are trying to say that Dow was bucking the trend and Nvidia was down, not NASDAQ. And now Nvidia is up and Dow is bucking the trend because the NASDAQ is essentially doing what Nvidia is doing.
Correct. NASDAQ is Nvidia, Nvidia is NASDAQ.
But we keep talking about the run on Nvidia, and I think there are a couple of big brokerages who have actually put out their next Nvidia that you want to identify for the market. So I think there are 12 companies that FactSet has put out that says that if you look at the valuations, the growth trajectory, those might be something that one wants to talk about. I think Semtech is one of them, Marvel Technology being the other one. So while Nvidia rally may continue or may not, some may count it as expensive, there are opportunities that are now popping up. So 12 companies on the listed NASDAQ could be the next big bet.
Yeah, but just one small mention. I'll tell you what, previously valuations of 3 trillion, people would ask, how much more can it happen? The same question came up at 2 trillion. After Elon Musk has said that robots could carry Tesla to a 25 trillion valuation, I've stopped bothering about the trillions. It's okay. It's 3 trillion.
It's just another zero.
How seriously do you take things that Elon Musk says?
Well, he's
also
but multiple industries.
The other reason on Nvidia is that there have been 90% buy calls. Of course, of the 90% buy calls on Nvidia, the price target is only 1% higher than last Friday's close. Of course, that's been taken out this morning, as we can see. But the fact remains that how much more? And if you're conservative, you may want to look at other opportunities. Of course, not to say that this rally in Nvidia is over, but nevertheless, there are other options that one should be considering.
Okay, so that's going to be a rising tide that all boats float on. And frankly, you've already seen the Nvidia effect on a whole clutch of semiconductor stocks. So that's been happening, and more to the list, like Samina is mentioning. So that's the story as far as US markets are concerned. In terms of bond yields, pretty much flat, about 4.25 on the 10-year. Once again, because everyone's waiting for that inflation data, which comes out on Friday, like we'd mentioned earlier. The personal consumption expenditure data is going to be very crucial to see what kind of demand we're seeing, and is inflation really under check at all. Crude prices have softened up to some extent after the run-up that we've been seeing, but Brent about $85. I'll just pull up Asia for you as well and look at what's happening there. So a mixed sort of setup, Nikkei, of course, up in the green. Our implied open is not showing too much of a movement either. We're going to see some maybe profit booking after yesterday's breathless run-up, at least on opening, or maybe that's directionally what we're seeing, just about 25 points down. But I was keen to see the fund flow because, remember, like we said, it was all about the banks. It was all about the private banks. And that's where the boom was yesterday. So FIIs did come in and buy about 1,176 crores. Not great volumes, but yes, relatively. DIs, really very small numbers there, 149 crores of net sell number over there. I think it's going to be another day which is all about the BFSI and the banking pack, though, Niraj, one would reckon. That's the focus, that's the flavor, and that's more than a one-day story.
Yeah, actually, so if you think of it, if you just look at the last 12 days, the FI long-short ratio is over 59%. 12 straight days of FIs creating long positioning. So a lot of it may not be even visible in the cash market buying, but on the derivative side, there is certainly some serious buying. And you would reckon that when they are making index longs, they are not just doing it on the Nifty, possibly on the bank Nifty as well. Who knows, maybe single stock futures, because I mean, HDFC Bank or an iBank, etc., are large names per se as well. But yeah, what yesterday's trade did was shift the immediate supports higher for the Nifty. Now, technical experts say that support is at about 23,550. So I would just follow what I'm listing on the technicals from the notes that come in. But this was the interesting piece. Like I said, the long-short ratio is now over 59%, nearly 60%. The long-short ratio at the FI side, they continue to build long positions, which is actually pretty stunning to see. And the only caveat yesterday that if you look at the options data at the higher strike price, so let's say 23,700, there were a lot more calls written as opposed to puts written. One would suspect that with the momentum the market had, a lot of people would be afraid of writing such stiff call positions. Now, there are two ways to look at it. Either the call writers are very confident that now we have hit a bit of an immediate top, or two, that if indeed the fresh writing was very high at 23,700 is the point I'm trying to make. But if indeed the market continues its upward trajectory, then those calls might get unwound. We've seen the same action happening at 23,500 in a meaningful way. A lot of call positions written, and they had to unwind compulsorily. So that was the one thing that stood out for me yesterday. And then, just in terms of pockets, metals continue to wobble. A clutch of notes today as well, which speak about how global metal prices coming off means that the export parity or the import pricing for Indian steel companies as well don't quite look handsome. So watch out for some of those metals. They continue to wobble, might not be the best place to be in. But real estate pre-sales, and we've been talking about how real estate has been behaving. Jeffrey's note today speaks about how they expect pre-sales from a Sobha, Godrej Properties, a DLF, and a clutch of others to be very, very strong. So I think that's a bucket that has done well, might continue to do well, and might continue to see favor. So not just real estate itself, but ancillaries too. So maybe that's one bucket that you might want to watch it for. But Tamanna is absolutely right. Yesterday, portfolios didn't make too much of money because not too many people, at least the trading portfolios, not too many people were on the trading long side, on the banking side. A lot of other pockets were long, and those necessarily didn't do well. So let's wait and watch if today is more of the same, while we show a little bit of a pullback at the start, Samina.
And that would not be such a bad thing. A little bit of consolidation in early morning trade is what is advisable. And also it seems like 24,000 by the June end series could be very likely on the index. But another important news that came in yesterday evening was the action on intensifying the monitoring on retail equity derivative markets in India. So what we believe that SEBI has formed a 15-member panel to protect retail investors who have, of course, aggressively been participating in the F&O space. Remember, the volumes in the F&O space have gone up fivefold between 2019 and 2022. So this is one more point of news that keeps coming back to imply and indicate that there is a little bit of froth. But participation across the F&O space by retailers is ballooning, and that is a concern for the SEBI, largely to protect investors. So this panel has been set up. We don't really know what's going to come out of this, but for now, this seems to be another step that the regulator is taking to protect retail investors. Well, apart from that, like Niraj said, it could be a morning of consolidation. We're not getting a very strong handover from world markets either. GIF Nifty, implied Nifty is indicating to a flat start. But 24,000 is going to seeming like the next resistance on the index. On the support side, we've moved from 23,350 to 23,550 now. So that is where you're seeing maximum support coming in for the street. Maximum call OI is seen at levels of 24,000, and that's hence we believe that that would be the support, or that the next level that the index will be watching on for. It's been a good month. 3.5% gains on the index is what we have. Well, let's quickly move on to stocks that we are tracking this morning. There are a few that I have on my radar, and of course, then Tamanna and Niraj will add to that list as well. You've got Sanghi Industries and C Infosystems. So you've got promoter stake sale that's going to take place on Sanghi Industries. The total of it is about 7 odd percent, which is broken up between Ambuja Cements, Ravi Sanghi as well. And just to break that number down, Ambuja is looking to offload 2.36% stake. You've also got Ravi Sanghi who's looking to sell stake of 3.5%. The price is set at about a 10% discount to yesterday's close. So yesterday's close was close to 103. The floor price has been set at 90 rupees per piece. So that's a discount, and you may see some pressure on the counter on back of that OFS. C Infosystems, again, a block deal is expected. We are expecting Rakesh Kumar Verma to offload stake. You are expected to see that at a 5% discount to yesterday's close. So again, that's the other one you want to be tracking in today's trade. Two companies where you are seeing a block deal take place. Well, apart from that, you've got Mazagon Dock. This is a stock I've talked about extensively over the last few months. The returns have been phenomenal. The stock is up over 200% in 1 year, up 75% in the last year to date. And the reason we mentioned this morning is because the government has given this one a Navratan status starting off, and it joins the likes of EIL, Concor, PEL, HAL, RCF, NALCO, NMDC. Well, what are the perks of being a Navratan? They can undertake investments up to 1,000 crores annually, and they can also undertake projects up to about 300 crores without any approvals coming in from the government. So sentimentally a big positive. Does it change the way business is going on for Mazagon Docks is anybody's guess, but what we do anticipate is the stock or investors should be giving this another thumbs up this morning.
Yeah. And interesting because defense stocks have not really been responding in the last week or so. You've seen profit booking.
And that's a long hiatus for them, right? Given that they have top gainers every day.
Absolutely. Apart from a Garden Reach, though, Garden Reach was
I think HAL as well a few days ago had a pretty good run. I've been intermittently tracking a few of those stocks, but
so for the last week or so, it's been quite dull.
Okay.
So you've had defense taking a breather. Garden Reach yesterday was the outlier, and that stock did exceptionally well. But I reckon sentimentally this is a reason for Mazagon to sort of do an uptick today.
Most certainly. No, just the one interesting thing that I thought of, C Info, right? Goldman note. The stock goes up 20% one day, then
promoter
some more,
sells.
and the promoter consultant sells. Now, the market momentum is good, so the market may look at it that, okay, the price has gone up, the promoter is selling a small stake. Or, in a bear market, I must tell you, the market would have thought that, boss, ye fayda le raha hai, let's go out and sell the stock, and the stock will stay lower. But today could be, right now, could be a different kettle of fish. It may just be a normal event, right? You take advantage of our price hike. A lot of promoters have done that.
And it's a very
coincidence,
small
you're saying, just a
sale.
coincidence.
No, I mean, just taking advantage of a high price. But just the point that it's coming
but
just on the back of
Niraj, it's
a
not as if they woke up this morning and on back of that note after a 20% rally decided to sell. When a promoter looks at an exiting a stock, it's of course done in a very quiet manner to begin with, and it was probably in the making for the last couple of weeks. They must have hired the banker, discovered the price. I mean, all of that does take place, and that's usually how it gets done when most of the promoters or founders liquidate. So I don't think it's a knee-jerk reaction to a 20% up move. At least that's what I think.
We'll wait and see. But the fact is that CE Infosystems' response to that Goldman note was OTT. It was a little over the top because you had a run-up of about close to 20% one day, but that continued for the next couple of days as well. So, timing is everything in that sense, and we'll wait and see. Just a couple of more that I want to talk about. One is Adani Ports. S&P has revised its outlook to positive from stable. So you might see a bit of a positive move there. It expects the company's improving financials to accommodate high capital expenditure. That's the reason that S&P has given. And they've affirmed a BBB long-term issuer credit on the stock. It's a strong asset quality which continues to support steady growth, volume of 8 to 12% over the next 2 years. Vishnu Prakash Punglia is the other one. It's received an order from the Uttar Pradesh Jal Nigam of 273 crores. It's a supply of all material, labor, etc. And it's an order for water supply scheme for Naini extended area of Prayagraj. Now, I'd anyway watch the stock because remember, you have to come back to some of the very core schemes that the third iteration of this government will want to complete, and Jal Senal is one of them that is not yet ticked off in that sense, bringing drinking water to every home. So I would watch for that stock. And the third one I think is an important one because remember, it was that Bernstein note on HDFC Bank which also helped fuel the kind of run we saw. And there's a Jefferies note today on ICICI Bank with a target price of 1350. They've maintained a buy. They say deposit growth of 20% is among the best in large banks. Lower cost growth to offset margin normalization. Asset quality is holding up and corporate book could see recoveries. It is among their top picks and expects an 18% ROE to sustain. So you could see, some reason there for another day of an upswing in banks and especially ICICI Bank. Anyway, big milestone for the bank yesterday, has entered the $100 billion club in market cap along with the top 5. So the big boys club in that sense, and ICICI Bank has hit that yesterday, so I'd watch out for ICICI Bank as well.
Okay, couple of new listings, and I'll watch out for both of those as well. They'll happen at 10 a.m. today, of course, but the subscription numbers were very, very strong for both. So I think watch out for Acme Fintrade, about 55 times. So that's the first one. And DE Equipment Engineers was subscribed over 99 times, and it's a large one IPO, getting subscribed so strong. So do watch out for both of those in the session today. And very curiously, NMDC is the second one on my radar today. The reason why this is interesting is because there are two conflicting notes here. And both of them have a rationale which you could argue that works. So Incred's note says that NMDC is amongst the top picks. And why do they say so? Because they say that this is, of course, Citi. Okay, let's start with Citi, no problem. Let's start with Citi. They have a sell rating with a target price of 215. They've opened a negative 90-day catalyst watch. Now, why do they say this? Is because they believe that the parity pricing for NMDC is at a substantial premium to the global prices, and therefore they believe there will be an imminent iron ore price cut which could bring NMDC prices lower. So that's the negative note on NMDC. Now the positive one is from Incred, and we'll get those graphics up on the screen as well in just a moment. Incred says that NMDC remains their top pick at 258. It is their top idea. Why do they say this? They say that they've seen a rise in scrap prices, and iron ore can also rise in the coming months according to Incred. And as a result of all of this and the fact that pellet premiums will remain high, and therefore they prefer pellet makers and iron ore players, as a result of which NMDC remains their idea. Now, remains to be seen, viewers, but considering that metals have seen a bit of a wobble, and if global steel spreads are so lower, very difficult to presume that iron ore spreads will remain so high. Therefore, keep an eye out for NMDC. If indeed there are price cuts, then it could result in a bit of a wobble for NMDC. So that's the other stock that you should certainly keep a keen eye out for, guys.
And of course, you've got stocks like a Zomato that may continue to see some buying after yesterday's sharp up move. So it's back above levels of 200. Very constructive. Brokerage notes the fact that their market share has also gone up substantially. And I'm sure Niraj and Tamanna talked about this extensively yesterday.
Yeah.
But it wouldn't surprise me if this continues to look good, because technically now it's well placed at levels of 201, which is an important level of support for the count. Resistance that has now been taken out on Zomato.
I mean, we were having this conversation yesterday on the closing show as well, that how much more on Zomato, and our technical analyst there said that when at $60, no one wanted to look at this stock.
This is swing trading,
and
where you
200,
support.
everyone's excited.
Yeah. It's like a little bit like HDFC. At 1300, there was no buyer. At 1700, it's the hottest stock in the market to own, it seems.
I mean, I doubt there'll never be no buyer for HDFC, but yeah, I get your point. Just one more I want to talk about is Telecom Industries, and that's simply because of this Investec note and the kind of upside they're looking at. Now, Telecom is in laminates and sanitary ware and more of that real estate plus kind of a product mix that Niraj was referring to. So all of your allied sort of products. Or ancillaries. So Investec has initiated a buy with a target price of 2362 per share, an upside of 40%. They see a rapid revenue growth in both exports and locally in the laminate space over FY19 to 24. That's what's making them confident. They see a different approach in marketing and distribution vis-a-vis the market leader, and like the strong earnings growth of 30% CAGR that they've seen for the decade 04 to 24. Incremental expansion also offers an attractive ROC profile. So Telecom is one that maybe would be interesting to keep on your watch list.
Yeah, most certainly. Keep an eye out these days. Some of these stocks are really making moves. Left, right, center. Okay, so that's the long and short of the stocks to watch. Remember, there is IIFL on PNB Housing, and they have a 30% upside, so watch out for that one as well. A clutch of names. There is JM Financial on Shivalik Bimetal and a few others too. But it's time for talking about, well, when the markets hit fresh highs, Alex, everybody used to say that, oh, the one pocket to avoid is PSUs. Suddenly we see when the markets now hit fresh highs, everybody talks about one pocket, and that is PSUs.
You cannot ignore them. Love them or hate them. In 2024, PSUs are the ones to talk about. And I'm sure that people that have been looking at the markets for the last few years will remember times when PSUs were trading at 1 time or less price to book. That is no longer the case.
When was that?
Some people might find it hard to remember those days, because and if you thought that you could buy a PSU on a song, you might actually have to change your tune very quickly. So, but let's talk about what is on offer right now and whether the valuations support the fundamentals. That's all lined up today. Harsh, Agam and Niraj all have information to take through for you, so that you can make your decisions with a little bit more information. So let's start with a wrap of how things have been, right? In that, what a performance it's been over the last 15 months, Niraj.
Yeah, so at 15 to 18 months, if you take an idea, the BSE PSU index, I'm using that as an example, the market cap is up over 2x. 2x in 18 months for PSUs is not something that was commonplace maybe a few years ago, right? So that's one thing. The P multiples, and Harsh will probably talk about price to book, but non-financials, you look at PE, the PE multiples, 12.8 times or 13 times versus 8.5 or 9 times. This is as per a Motilal Oswal note. So the multiples have moved up quite substantially as well, right? Nearly 40% uptick in multiples itself. 2 times 12-month forward price to book, if I'm not wrong, Harsh, or an average. Maybe a decimal point here and there, but 2 times price to book now, so to say. And ROEs are at decadal highs. So there is a fundamental reason why some of the PSUs have done what they have done. It's not just a market cap gain. There is also fundamentally fundamental changes in that ROEs have moved up. And, I mean, if you just look at everything else notwithstanding, this whole emphasis on localization, make in India, give preference to PSUs, defense, etc., maybe the center point, but everything else out there, so kind of brings them. But the thing is, and, I'll talk about the non-BFSI pocket, and just this, compare the increase in profitability, just taken one simple metric, versus the increase in market cap over the last 12 months. So viewers, FY23, end of FY23, the PAT versus the recent PAT numbers that have came out, so 12 months, and the increase in market cap. So look at this. HAL, 30% increase in PAT, 293% increase in market cap as of yesterday. Give or take a few points, right? Depending on close. BDL, 74% increase in PAT, 217% increase in market cap. Coal India too, we call it a slow mover, 32% increase in PAT, but 118% increase in market cap. Cochin Shipyard, I mean, this is stuff that dreams are made of, right? 156% uptick in PAT, yes, but 820% increase in market cap. Even EIL, 28% increase in PAT, 242% increase in market cap. And the multiples, guys, I mean, look at that. FY23 PE, the stocks were trading at 15, 51, 4.5, 20 times PE. And look at the trailing 12 months PE for some of these stocks. I mean, this is crazy stuff. They are certainly climbed the part of the valuation. So that is the point. That's the first point, right? On at least the non-banking ones. Maybe Harsh has data on banking that we should try and talk to. But Alex, the limited point is that yes, there is an increase in fundamental performance, but the valuation re-rating has been very substantial.
So we will, let's run through actually the PSU banking pack as well, because that will tell a similar story. And then we'll jump into what the fundamentals stand at right now and the outlook going forward and whether or not the valuations support that. But the PSU banking pack?
Well, yes. So I've tried to cover 4 key banks and 2 NBFCs. So let me start off with SBI, the big boy of the pack. 66% growth in terms of stock price, valuation, market cap, and every day breaching new highs, SBI. And your PAT growth has been 22%. But is that the right way to look at it? Maybe not, because fundamentals have changed quite dramatically. SBI, which was expected to grow, or most PSUs which are expected to grow mid-teens,
lending,
yes, or maybe in just about double-digit kind of loan growth, are now clocking mid-teens kind of loan growth, and therefore the market is starting to reprice some of these, and the confidence comes from the fact that asset quality is clean, right? And justifiably so. Also, recoveries are very strong. So some of these factors are behaving as a tailwind. So you'll see some of the, some of the growth numbers in terms of profit after tax, but may not be the best metric. But you look at the last 15-month returns, clearly signifies that there's plenty of tailwind that the industry is currently seeing, and asset quality is holding up fairly well. So there's no concern there. When you're looking at valuations, if I can switch that picture, 15 months back, valuations were roughly between the 0.5 to 1 time price to book outside of SBI, right? SBI was at 1.3. All of them have re-rated dramatically. So they've literally doubled in price to book valuations at the very least. Yeah. PFC has gone up 3.5x. REC has gone up 4x in terms of price to book valuations, from half to 2 times. So some of these themes are really now looking at multi-decadal themes in terms of growth, especially for these energy financiers. And you're looking at some of these public sector banks being able to compete more effectively with private sector banks because asset quality has come in very, very well.
Just one question, if I can just bring in Alex with your permission. Sage One did this analysis of the recent past, and they have looked at what's happened to PSU financials and energy stocks, so PFC, REC, etc. And there they're saying that the P multiples haven't they've used P, but not dramatically moved up because profitability growth for a PFC, REC and some of the others have also been very strong.
You're so absolutely right, but Niraj, key to watch out here is the reversal in terms of provisioning, ECL basically. Right. Credit loss reversals have been very strong, especially for these power financiers. So I'm not really sure whether that is the correct base to take, because that may be a 1 or a 2 year theme, right? The reversals may start to go back to provisioning, in which case your profitability will start to either flatten or fall.
So take that with a pinch of salt is the bottom line.
Yeah.
There is one more update before we move into the operational picture and how things look going forward. And there is a significant update for Mazagon Shipbuilders. We spoke about Cochin Shipyard. Similar business for Mazagon, right?
Yeah.
So, but they've become Navratna today. How significant is that?
Well, it certainly is a feather on the cap for Mazagon Dock, because we know about the kind of traction that they've seen over the past years in terms of the kind of order flows. Well, at the moment, the fact that it gets a Navratna status, what it means for Mazagon Dock is that, firstly, that it can invest in projects up to 1,000 crores without the government's approval. Moreover, it can also use up as much as nearly 30% of its net worth for several projects, once again up to 1,000 crores, once again without a government's approval. But more importantly, I reckon that when it comes to lending, a lot of banks would now be a little bit more open to lend to Mazagon Dock because of the Navratna status. So the Navratna status does open up a lot of doors, and naturally this does mean that it's a big positive of sentiment. Of course, it has a very large order book, a substantial amount of visibility. So the 1,000 crores is not going to matter as much. But it's a positive in terms of sentiment all the same.
And look, it's not. I didn't see it on the list of stocks that you put up, but it's not anything to scoff at either. 73% in the year to date so far. There's a stock price increase 216%.
So there was a pack of defense companies which have actually done very, very well. And the only limited point that I wanted to add was the fact that of course there's been a huge up move in their profitability, but they also have a substantially large order book, which actually gives them visibility of up to 4 to 5 years down the line. In fact, some of these orders are not even going to be delivered over the next 2 years. The delivery of these orders will start from 3 years onwards. And that's when they start getting those revenues and coming through.
So for the manufacturing companies then, and we'll come to the banks in just a bit, just to wrap this up, is that the most important fact? The fact that there are large orders that are currently available to them or in their books, and the prospect of significant more orders coming through, the defense minister talking about export orders for defense companies and various other manufacturing companies also looking at that. Do you look at PSU manufacturing companies from a different lens and say, 1.8 times or 2 times is now par for the course?
I think the market is already looking at them differently, and which is why the valuations that are ascribed to them. But Defense Minister saying, Zen Technology is saying that the next 5 years will dwarf what has happened in the previous 10 years. Just the question is at what valuations. And the one point on the non-financiers, and I rest my case there, is that brokerages are now coming out and saying that the stocks have run up a bit. So we are revising our list. So Motilal Oswal, for example, in the latest note has said that their ideas are now SBI, Coal India, BOB, GAIL, HPCL. They're saying we can't recommend, which are trading at good valuations, 7-8 times price earning multiple. I mean, Coal India and GAIL, etc., and stuff like that. So they are kind of shying away from making a fresh recommendation on some of the different stocks. But the point is absolutely well taken. The street is looking at them differently because of the order visibility.
Very quickly on the banking pack.
So
same point.
Yeah, so of course it's a multi-year tailwind with regard to credit growth in general, not just with regard to corporate. At the moment, we've not seen corporate really pick up, so we'll have to see corporate capex really pick up to kind of get a sense of whether there is that confidence to borrow. So I think it's too premature to kind of just conclude that corporate capex will pick up. But yes, the consensus view seems to be H2 or second half FY25 corporate capex is expected to pick up.
So my biggest takeaway is that while everything has rallied and everyone has done well, don't have a pray and spray kind of approach from here on, be more selective. But it isn't over yet. The PSU story definitely isn't over. We certainly aren't calling it. So that's what you can take from that. There are still buyers, of course, in the stock, and that's evidenced by the kind of moves that you're seeing on a daily basis. Do stay tuned. Lots more coming up in just a bit. We have to slip into a break, but F&O Q's on the other side.
Welcome, this is India Market Open. We're taking stock of the futures and options space. It's going to turn out to be another very interesting day of trade because we are looking at the Bank Nifty monthly expiry coming through, and that could likely have some amount of choppiness coming in, especially given the fact that yesterday we in fact saw a lot of these banking and financial related indices close at life highs. Now let's take a look with how the futures panning out. We start off by taking a look at the rollovers, in fact, and the Nifty rollovers have caught up to a certain extent, and of course currently standing at around 41%. We still have today and tomorrow to go for the Nifty expiry for the June futures, but the Bank Nifty futures do expire today, and that is the reason why the rollovers are looking at that higher at around 49%. Of course, this number will be considerably higher even from these levels, but we are starting to see traction there. Now coming down to the options market again, when it comes to that, again a day where we did see a lot more put writing, perhaps on unexpected lines, considering the Nifty moved higher. And also, in terms of your overall open interest distribution picture, we're now starting to see a little bit more writing around the 23,500 and 23,600 puts. Of course, on the higher end, we continue to see the most amount of open interest around the 24,000 call. It is, the monthly expiry for the Bank Nifty, and the levels that we are watching out for, naturally will be around 52,000 thereabout. Of course, 54,000 is where we are seeing a lot more call writing, but perhaps it's unlikely that we're going to see the Bank Nifty move anywhere around there. Moving on to stocks, again, a mixed day of trade, and Crompton and Colgate did see unwinding along with Navin Fluorine, naturally because we are in the final couple of days when it comes to the expiration of the futures contracts. That said, let's take a look at what experts are making of these markets. We have Amardev Singh of Angel One who's joining us on the show. Amar, good morning. Thank you so much for joining in. I believe the first stock on your radar is Apollo Tyres. Can you take us through that?
Yeah, thank you for having me on the show. So Apollo Tyres, what we are witnessing here is that the stock has broken out of a consolidation and also on significant heavy volumes. And if you look at the options data, so that also we are seeing more of put writing happening there, and that is a bullish trend. And also what we are seeing is that though the put call ratio currently is 0.74, but this is for the June series, we are seeing a significant build-up happening in the July series. So this is one stock one can definitely look at from a short-term perspective for the July series. Apollo Tyres with a target of 545 and a stop loss of 503. So this is one stock we can look at.
This is an options only segment. What if we actually convert this into a bull call spread? What strikes would you choose for Apollo Tyres?
So if you look at Apollo Tyres in that case, then one can look at buying a 520 call option and then selling a 530 call option. So in that case, that could be one can look at for the July series.
Okay. All right, Amar. The other one on your radar is Indian Hotels. Can you take us through this one as well?
Yeah, so Indian Hotels again is on a very strong trajectory, because if you look at this particular stock, it has breached a crucial zone of resistance. And also what we are seeing is that the trend continues to be very strong and positive for Indian Hotels, and that also on significant volumes. So this is one stock one can look at, because on the intermediate term trend, on the long term trend, the momentum is very strong for this particular stock. And also if you look at the options data in terms of the put writing, again, put writing here is significantly higher as compared to this. And if we look at the July series, there we are seeing a build-up happening in terms of the futures contract. So this is one stock one can keep a close watch on. It has broken out. The upside target for the July futures is 710 with a stop loss of 631. So this is a second stock one can look at.
So two interesting names coming up here, Apollo Tyres and Indian Hotels to watch out for. Amar, on that note, taking a moment to thank you for joining us and getting us those calls. And with that, it's back to you all.
All right, thank you for that, Agam. Kunal Rambia is joining us now, founder of The Street. And this is going to be an exciting morning, one way or the other, because remember, you've closed at new levels, new highs. Nifty's closed above 23,700. Bank Nifty has been on a tear. So let's just start with that. Kunal, very good morning to you. How do you see the Nifty and the Bank Nifty placed?
Very good morning to everyone. So if you look at the Nifty formation, I think we saw the breakout on 13th of June where we saw the first all-time high again. Since then, it was in sideways consolidation, almost 6 to 7 trading sessions. And day before yesterday was the first breakout followed by yesterday's breakout where the Nifty made a new high. So I think it's entered into a new trajectory from the present level. From this point of view, I think 23,500 can be a good support level for now. Any decline near to 23,500 or 450 can be a good support, and that can be considered as a buy on dip opportunity. And stock specific movements are going to be very likely. So rather than looking at the index per se, we should be focusing on stock specifics from here on because it's going to be very selective move from present levels.
Mm-hmm. Okay, Kunal, good morning. So the question to know, therefore, more importantly is, can somebody buy Bank Nifty today? And if so, what is the stop loss that should be kept?
Good morning, Niraj bhai. So yeah, Bank Nifty is looking very strong, and yesterday was the first breakout itself. Mind you, on Nifty it was a second breakout, but on Bank Nifty it was the first breakout itself. And the consolidation zone breakout was in the spot level at around 51,900 levels. And what we saw was a rally of around 700 points after that. So yes, Bank Nifty is looking stronger than Nifty, and any decline from the present level, see, because it's at elevated levels, right? So the risk reward ratio is unfavorable. I would advise that if you're an aggressive trader, then yes, you can initiate a buy at the present level itself, and the stop loss can be 52,300. But otherwise, from the positional trader's point of view, I think one should wait for a bit of consolidation and a bit of price correction somewhere near to 52,450. One can think of initiating a buy. Stop loss in that case can be 52,300, and the targets can be 53,500 kind of levels.
That's the call on Bank Nifty. So you're fairly constructive on this one. But specifically on HDFC and ICICI Bank, do you think the rally could continue? And those two also look good. So if one's looking to trade them, a buy call on those two stocks this morning is an option, you think?
So, since yesterday we are seeing a good decisive move in the HDFC Bank and the other banks also. But now just let's go back to, just a couple of months back when the counter was in decline mode. The first massive correction was on 17th of Jan, where HDFC Bank came down by almost 9%. And since then, it was in sideways consolidation. The level which we initiated a buy and we recommended also were at around 1450 kind of levels where the consolidation was going on and the risk reward ratio was favorable. Now, the counter has reached that particular peak from where multiple times we have seen the correction in the last 3 years. And those levels are 1715 to 1725 kind of levels. And mind you, this particular resistance is on chart since October 2021. So from this level, I don't foresee a new rally emerging unless and until the counter gives a decisive breakout of 1725. I would in fact advise our viewers that if they have already initiated a buy earlier, this is the time to take out some profit off table and hold the remaining position. By any chance the counter manages to break 1725, then we can initiate a fresh buy. Otherwise, I would remain cautious on HDFC Bank from the present zone.
Kunal, in that case then, what do you think will help Bank Nifty to higher levels? What are the stocks that one should buy amongst the private sector banking names?
So private sector banking, Tamanna, again, I feel too much of upside is already being done. And in this the recent rally, the private sector, I think the PSU banks have not really performed. The counter which I am eyeing on right now is State Bank of India. And that's only because the entire 2 months, the SBI has faced the resistance of around 845, 850 mark. By any chance the counter manages to cross about 850, I think the next rally from here on can be in the PSU banks, and the SBI can lead the rally with a target of around 910 to 915. I'm eyeing on this counter above 850, and the stop loss in that case can be 835.
Well, since we're talking about the banking pack, want your take on ICICI Bank, and of course we need to get to your picks. But ICICI Bank also because of the Jeffries note today. The fact that new landmarks crossed by this script as well. What's your take there?
Absolutely. 2 months of sideways consolidation was taken out yesterday, and the breakout was at 1170. Counter gave a closing near to 1200 mark. Now again, the 1170, which was resistance, we call it as change in polarity in technicals. So I think 1170 can be a good support if the counter manages to close above these levels for at least a day or two more. So with the stop loss of 1170, one can initiate a buy. Again, in such trending counters, I would always prefer to buy when there is a correction rather than a breakout. So for aggressive traders, it can be a buy. For a positional trader, I think 1185 can be a good level to initiate buy. Stop loss 1170. And I think the targets can now be at around 1225 to 1230. Immediate targets can be 1225, 1230.
Right. Well, those are a bunch of stocks that one needs to be watching out for. But let's quickly shift focus to some of the other stocks that you should be watching out for as we get into trade this morning. Mika brings us the list. Mika, what do we have to watch out for this morning?
Yes, good morning. So up first we have Adani Green Energy, where the company has announced in its 9th annual general meeting that they're in process of investing 2 lakh crores over the next 7 years as they're aiming to increase their renewable energy capacity to 50 gigawatts by 2030. Now the current operational capacity is at 10.9 gigawatts, which has the potential to generate around 5,000 crores of free cash flow. And they also have a land bank of 70 to 80 gigawatts. FY25 capacity utilization factor is also set to be around 33 to 34% versus the 25% in FY24. And this higher CUF will help in generation as well as revenue. And the company is also set to add 5 gigawatts of pumped hydro storage capacity. Up next, we have Sanghi Industries and the promoter Ambuja Cements and Ravi Sanghi to sell their stake, a total stake of 3.52% via an offer for sale. Ambuja Cement will offload 60.92 lakh shares or 2.36% stake, while Ravi Sanghi will sell 30 lakh shares or 1.16% stake. Now the floor price is fixed at 90 rupees per share, which implies a 12% discount to the previous market close price of 102. And the offer for sale will be open for non-retail investors today on June 26 and for retail investors tomorrow on June 27th. Then we have Oil India, where the board has approved a bonus issue in the ratio of 1:2. This means that one bonus issue will be issued to every shareholder that already holds 2 existing shares, and the record date set for the same is July 7. It's also the company's first bonus issue in the last 6 years. The last issue was in 2018. And lastly, we have NTPC, where the board is set to consider a fundraise of around 12,000 crores on June 29th, and this would be via non-convertible debentures.
So those are some of the stocks which need to be on your radar. Kunal, just before I get your view on any of those stocks that Mihika talked about, let's get your list for today, your picks.
So I am looking at a couple of mid-cap counters. The first one is Hikal Limited, the Hikal Limited. Now this counter is come out of the massive consolidation of last 3 to 4 months, a day before yesterday, I guess. The breakout was at around 340. Now that can be a good stop for the counter. One can initiate a buy with the target of 365, 375 in the near term. The second is Renuka Sugars. Again, we saw good rally in the entire sugar pack. This counter retested the breakout yesterday and it was positive in trade yesterday. So with the stop loss of 50, one can initiate a buy on Renuka also. And the positional target on this can be 60. And the third is Campus Activewear. On the result day, we saw the good rally in the counter. Since then, it's in sideways consolidation and the symmetrical triangle is coming to an end as per the technical formations. So with the stop loss of 280, one can keep accumulating. Even on the breakout about 290, one can quickly initiate a buy on this. The immediate target can be 320 followed by 325.
Kunal, very quickly, a word on Amara Raja. It was up 20% yesterday. Further upside likely if the stock gets a flat start. What should an already existing trader do who has an allocation to Amara Raja? And for fresh trades, any opportunity you think?
See, let's just go back a bit and check the entire formation since March 2024 till now. From 740, counter is now trading at 1650 kind of levels. Now, in this entire rally, we saw multiple declines, right? So I would not be really keen to initiate a buy at the fresh level at these record high levels. Rather, let's wait for the consolidation and a bit of correction. In these trending counters, we can always initiate a buy near the support, which is right now placed at around 1540 for Amara Raja. So with the stop loss of 1500, then one can initiate a buy and then the targets. Let's keep the targets open because these are trending counters with a massive volume. We have seen the upper circuit yesterday. I think this rally might just continue till 1850, 1900 also. But initiate a buy near to the support to have favorable risk reward ratio.
Mayuresh Joshi, head of research at MarketSmith India with us as well. And Mayuresh follows the CanSlim approach, which involves buying strength. And Mayuresh, that's my question to you to start off with. Good morning. A stock like Amara Raja, which has gained substantially yesterday, probably extinguishing whatever valuation differential existed between itself and Exide, and both of them not cheap anymore. Would you go out and invest afresh into something like Amara Raja, which has had this landmark announcement yesterday?
Morning, Niraj. So yeah, we do follow CanSlim and we follow growth investing. So to that extent, I think any pullback which probably comes through on either Amara Raja or Exide can be viewed in a positive sense. I think 2-3 things happening here, Niraj. Oligopolistic market, two of the largest players as far as the battery systems are concerned. And in the existing scheme of things, as far as internal combustion engines are concerned, that will continue at least for the next 2 to 3 years. At the same time, with the capacities that are expected to come up, 6 gigawatt hours each for Amara Raja and Exide, a large element in terms of servicing the electrical vehicle ecosystem should largely be in place as more and more platforms and models start getting rolled out over the next few quarters. The second element of their business, obviously, is the industrial part of the business, which is around 30 to 40% for both the players, which also acts as a solid support. And with the kind of infrastructure development that one really sees over the next few years, both in terms of private and public capex, this part of the business segment should hold up pretty well as well. The replacement market is doing well for both these players because pricing is in their favor, which probably aids a little bit of the margin improvement that you probably see. Obviously, input costs is something that nobody has control on, but that obviously gets passed through if and any increases to take place. So is there a sufficient amount of entry barriers for new players to probably come in? Yes, I think they have got a significant amount of oligopolistic control in terms of the market that they probably are at this juncture. And new players will find it very, very difficult to put in capex and a distribution network as well. Obviously, technologies are going to evolve, but as technologies evolve, I'm pretty sure these players will be adept. So yeah, I think we remain optimistic on this.
Mayuresh, good morning. Tamanna here, and just have to get your view on what's happening with the banks. Because while Amara Raja was sizzling, I mean, what we saw with private banks yesterday was astonishing to say the least. So let's start with HDFC and ICICI Bank. Both back in the favorites list, you would say?
Would land in the favorites list. Tamanna, morning to you as well. So again, I think the entire thesis that a lot of analysts are working out that advances growth should be pretty strong and stable over the next couple of years. Deposit mobilization has been a big issue for a lot of the larger banks, particularly, I think, private ones. I think that should also in some sense normalize over the next few quarters. At some point of time, we will get rate cuts, both in the global and the Indian context. Probably at the end of this calendar year. And with that, I think the normalizations of NIMs and spread, which have contracted a tad bit, would also aid the overall earnings growth as well. Last but not the least, the kind of provisioning that a lot of these banks have on their balance sheet. Obviously, the RBI regulations over the past couple of quarters in terms of unsecured loans, personal loans, I think the strengthening in terms of providing more is probably creating a lot of cushion in terms of the risk-weighted assets in the overall banking system as well. And a lot of factors at play should probably aid the entire BFSI universe as well. So yeah, I think we are optimistic and we have both these banks on our watch list. But we also have public sector banks on our watch list as well. So I think is selectively even these banks might do well as far all of these parameters are concerned.
Right. Mayuresh, it's also Samina joining in. You've talked about banks and we've seen the euphoria on Bank Nifty and a bunch of those banking names that have seen an exceptional performance over the last few days. A quick check on what happens to non-banking names. So we've again talked about this, I know, for the last couple of months, capital market plays or anything that's non-banking in that sense. Is that still a great opportunity or do you feel like in the near term, pure banking play is a better option than non-banking?
I think it's a mix of both, right? Because banking, Samina, morning to you as well, will continue doing well in the Indian context. India is a growth market. And therefore, if you put out a larger canvas over the next 4 to 5 years, banks will be a backbone in terms of the entire growth dynamics that you are speaking about. But again, I think outside the BFSI universe, domestic cyclicals will continue doing well. Our take is the government capex will continue in all key sectors, including infrastructure, including manufacturing. We've already seen a hint of that happening in terms of what is expected out of defense as a play as well, railways as a play as well. And therefore, I think the government focus will continue with a large part of capital allocation happening towards these sectors as well. What really will transpire, Samina, is that private capex is showing initial signs of a pickup as well. And as that starts picking up over the next few quarters as well, that affects the kind of growth that one really looks out for. So outside the BFSI universe, yes, we are constructive in terms of domestic cyclicals, real estate ancillaries, a few of the auto ancillaries as well. Because I think that is where the growth mechanism and earnings momentum might very well.
Right. All right, we'll take a very short break. We'll come back and talk about more stocks that should be on your radar. What should be your strategy for a morning which is going to see the Nifty possibly still open above the 23,700 mark. We'll be back with all of that. Stay tuned. Welcome back. You're watching India Market Open. A quick check on implied Nifty. It is expected to see a flat start in early hours of trade. A 20-point gap down is what we're working with. It could be a morning or first half of consolidation after a strong performance put up by the index in trade yesterday. Bank Nifty as well is what you want to watch out for in today's day of trade. It single-handedly lifted the index in yesterday's trade, and expectations are that there could be further buying emerging in Bank Nifty in today's session as well. Well, that's pretty much what we have, but you've got a whole bunch of listings as well that the markets will be eyeing over the next couple of days. I'll talk about the ones that are happening today, but there's also a few like an Allied Distilleries that are open now in terms of an IPO. Whether or not those look like good stocks that one should go into. Mayuresh, I'll start with Allied because this is the one that's open now for participation from retailers or retail investing in that sense. What did you make of Allied Distilleries? Is it looking like a good one to go after? The Chabria's listing after being in the business for over 2 decades, I believe?
Samina, unfortunately, we don't track this, so unable to comment. Sorry.
Right, okay, so that's not something that Mayuresh covers in that sense, but we've highlighted a few other names. Mayuresh, you want to come in on Mazagon Docks? It's been given a Navratan status. I don't think it changes the way business is going to be done for Mazagon Docks or in terms of order wins. The stock is up 74% year to date. It's up over 200% in the last 1 year. A Navratan status, does it mean anything fundamentally for the counter, you think?
I think nothing really changes, and the business dynamics obviously have been quite exemplary for a lot of these players, specifically players like a Mazagon, players like an HL. The numbers also have been astounding in the quarter gone by. So I think all the tailwinds that one probably looks out for, very strong order books, more orders expected to come their way, good margin orders, they're executing well. And even with such a huge rise, I think the valuations compared to the larger universe is still reasonably placed. So the arguments are in favor. Do you go right now? Do you wait for declines? Obviously, if you wait for declines, the correction is just not coming through. I think that supply is being eaten up. Obviously, there is some constraints as far as the free float is concerned as well. But yes, there are a lot of tailwinds. I think the only risk, as I've always been stating, is any execution miss. But whether that happens or not, I think only time will tell. But yes, I think significant pullbacks are required if fresh investments are needed to be made.
Mazagon doing well in the first few minutes of trade, or the first minute of trade actually, so that sentimental boost definitely being seen. What else is moving? ICICI Bank down in the red, maybe some profit booking there, but early days yet. Bharti Airtel in focus, and one of the reasons could be the spectrum auction which has ended yesterday. It was the first day of the spectrum auction in fact, and the aggregate value of bids came to a figure of around 7,500 crores. Do we know who's bought what? Let me go across to Rucha for more on that. What are the big takeaways, Rucha?
Thanks, Tamanna. So as you rightly mentioned, it was day one. 5 rounds of this auction are completed. Now, if we look at the demand was 7,500 crore out of the total 96,000 crore. So demand is very muted, around 7% of the total supply. Now, talking about 5G, we saw no new demand for 5G spectrum. But one pertinent thing to note here is that the telecom operators have largely converted their existing 4G spectrum band to 5G band, because obtaining new 5G band is largely very costly. So this might be one of the reasons why the new demand for new 5G spectrum was muted. Now, talking about the band categories, we saw demand in the 900 megahertz band, where largely Airtel and Vodafone Idea have their market share, and this was largely because they wanted to renew their existing spectrum. So the new demand was largely less than the supply on the day one, where 5 rounds of the auction were over. We will wait for more updates, and the auction will be over once the entire demand is exhausted, and till then, this is what we have for today.
All right, so that's the takeaway from the first day of spectrum. But I want to get, Mayuresh, your view on Vodafone, Bharti Airtel, and let me add Indus Tower there as well. Vodafone will be possibly watched to see how much they actually are looking to expand through those spectrum auctions, if at all. What would be on your radar, and are you now getting more constructive on Vodafone?
So, Tamanna, to a certain extent, they will be very, very selective, and in circles where they are operating currently, they would like to strengthen their presence there, because largely over the last few quarters, both the subscriber market share and the revenue market share has come off quite significantly for Vodafone Idea. And I think all those subscribers have been gobbled up either by Bharti or by Jio. The second element, obviously, is the expectations in terms of the deleveraging process that the management is putting forth, either through the capital raise or stake sale that has probably happened in Indus. So I think to that extent, there is some element of respite as far as the balance sheet debt is concerned. The third element is they are obviously lagging behind Airtel and Jio in terms of the 4G and the 5G ecosystem. So they need to have accelerated investments also done in terms of infrastructure, and capex has to be laid out in order to regain or maintain their market share in the key areas that they probably operate out of. So there is going to be a lot of stress as far as balance sheet is concerned, a lot of positives related to all the news and developments that we've probably seen might be in the price at this juncture. For Airtel and Jio, again, I think price increases is something that the street is probably looking out for. So any price increases automatically increases ARPU. They've front-loaded a large part of their 5G capex both in terms of spectrum, renewable of spectrum, the 5G infrastructure spends as well. And therefore, I think any incremental ARPU increases will directly benefit cash flows. And that is again getting penciled in terms of the huge price moves that you're probably seeing. For Industars, I think the debt has gone up over the last few quarters. With Vodafone probably expected to survive, the tenancy ratios should relatively remain stable. Expectations in terms of core tariffs or rates per tower are expected to probably inch higher in the next few quarters. And with that, I think the deleveraging on their balance sheet probably might be a respite in terms of return ratios for shareholders. So I think Industars is something to be kept on your radar. Anybody holding on to Airtel should continue.
Kunal, what do you feel technically? How does Vodafone, Bharti or Industars look? Any of them that you're constructive on?
See, if you look at the overall formation of Vodafone since March 2023, yeah, it's in the positive trend. But the last 6 months, the counter is facing constant resistance near to 1840. To be precise, on 1st of Jan, the high was 1840, and the similar high was witnessed somewhere in February. That was on 23rd Feb, again 1840. I think unless this 1850 kind of levels is not taken out, I'll remain cautious on this. It can be a good trading range between 1350 to 1850 kind of levels, but unless this is taken out, I'll remain cautious. Above 1850, I expect the targets of around 22.5 to 23 levels.
Okay. The pre-open rates are okay. So some of the high flyers of the last few days, so if you look at a TBO Tech or a Krystal integrated, are also a bit quiet in the session thus far. So let's wait and watch if this changes. In fact, after 2 or 3 straight days of some very strong up moves, TBO Tech is actually in the red. Interesting. Krystal integrated about 0.5%. So that's the other one to focus on. And what's gone down today on a Macquarie note are stocks like Max Health, because they've gone out and said that there could be an issue there. Vedanta is down 3%. There's a talk of a large block in Vedanta today. And we'll watch out for our flashes to see if indeed that block goes through immediately on open or otherwise. But I'll certainly watch out for Vedanta. There is 11% equity in Hindustan Foods that has changed hands too. So that's the other one. But Mayuresh, metals, a lot of weakness in trade yesterday as well. Vedanta in particular, if assuming that there is a block that happens and it starts off lower, what do you do with a Vedanta then? Would you be a buyer at lower levels?
I think we'll still wait, Niraj. I think a lot of stuff is going around, right, in terms of expectations of their bond repayments also, which are expected, deleveraging in terms of selling of non-core assets, so on and so forth. But I think the core remains the same. I think for a genuine recovery in terms of a lot of these metal stocks, recovery in LME prices is going to be a key element. And therefore, what happens in terms of a Chinese recovery is going to be a base case scenario here. Because unless the Chinese economy recovers, or shows that initial signs of recovery, I think LME price movement on the upside probably remains restricted. The second element that probably remains in a favor of a lot of these metal stocks is that inventory levels are at an all-time low level. So I think as restocking starts taking place, obviously I think the price dynamics will also keep on changing, and restocking will happen in terms of demand coming back, both in China, the Eurozone, as well as other parts of the market. Along with this, as demand comes back, restocking happens. Input costs will also start inching higher. And therefore, it's a complex dynamic at this juncture. And therefore, I think it's a wait and watch. Out of this space, I think within the non-ferrous guys, Hindalco is one stock that we've probably kept on the watch list. Because our take is that a lot of price damage as far as pricing of aluminium is concerned is largely done and done with. As demand comes back slowly and steadily, specifically from the EV players, we've already seen Novelis commentary in terms of the beverage markets holding up as well. A lot of demand probably has stabilized, and to that extent, a price recovery in aluminium can probably be much faster than other metals at this juncture. Yes, copper has done well in the past, but probably might go through consolidation is what our global commodity expert probably feels. So one stock that we've kept on the radar from the entire package is that.
Right. Well, we've got pre-open rates on the screen and it's looking like a quiet start, but the stock of the morning may potentially Mazgar dogs. Along with it, the rest of the defense pack actually looking pretty well placed in early minutes of pre-open trade. But let's quickly move on, as always, to Harsh, who's standing by with what the brokerages have on their list. JM Financial has initiated coverage on Shivlik Bimetal with the buy stance. Harsh, what does JM feel about Shivlik? What's the price target? What's the reason for the optimism and the buy stance?
Well, 30% plus upside from here. 730 rupees is the target price that they've given. Now, just in terms of where revenue growth will come from, the largest chunk of their revenue comes from shunt reactors, and both the domestic as well as the export opportunity seems extremely strong. You're looking at both smart meters as well as EVs really aiding this particular pocket in terms of product. And Shivlik has really made a good dent in this particular pocket. In fact, JM is expecting shunt revenue to grow by a 30% CAGR, FY24 to 26, and margins for this product to be in the range of 23 to 24 odd percent. Outside of that, of course, it's a bimetal company, as the name suggests itself, and it has an 80% share in the domestic bimetal market. So that's quite large as well. 17% CAGR expected on that particular vertical, and margins of roughly 23% also expected. This is FY24 to 26 again. Then a smaller component is the electrical contacts. Small, but it in terms of customers as well as the reach. It basically serves both sides, the bimetal customers as well as the shunt reactor customers, and therefore is a positive and an easy sell for this particular company. 37% CAGR expected on a smaller base, of course, and margins of 11 to 12% on this count, taking the cumulative revenue growth at 25%, EBITDA CAGR of 29, and PAT CAGR of 29 from FY24 to 26. Now, just in terms of customer stickiness, one thing that really stood out for me in the note, not a single customer lost by this company in the last 10 years. Just goes on to show the stickiness of the business. It's also a business where custom-made products are quite significant. Around 30 times FY26 estimates is what they are pegging the valuation at.
Thank you for that, Harsh. Now, another note that we should quickly talk about, because I think we'll see some impact. Pull up Apollo Hospitals, pull up Max Healthcare, actually. So Macquarie has come out with a note saying that chinks in the armor are starting to show. So Max held down about 2% in the pre-open session. We'll see how it opens, though. Indian Hospitals' top-line growth has been primarily driven by rate hikes as volume growth continues to moderate. Organic bed capacity additions in the next 3 years is 4x the addition of the past 5 years. Believe this would pressure profitability. That's the key line. They've reiterated an underperform on these two, Apollo and Max Healthcare, and their earning estimates are 9 to 22% below consensus. I don't know if you have a very quick view, Mayuresh, on the hospital pack.
So, Tamanna, I think we remain selective here, and our take is that this space should do well. Again, I think in terms of matured hospitals, the numbers are coming through very well. A lot of these players have embarked upon the asset-light model, where they are probably looking at management of hospitals and not a large part of capex probably being put in land and buildings. And therefore, that part of the model is working extremely well for a whole host of players within the space itself. The diagnostic space, the expectations in terms of core parameters, the average revenue per operating bed, expectation of average length of stay, etc., I think should inch higher as new centers which come through on their own should start contributing positively to ROCs as well. So I think we believe in leadership stocks doing well in this space. Something like Apollo can continue doing well over the long period.
So you like Apollo? What about Max?
I think it's a good story to play out, Tamanna, very frankly. I think they have got optionality. Yes.
You're constructive. All right. Kunal, very quickly, a word on Mazgaon seems to be one of the leaders today.
Yeah, it's a trending counter as we discussed, and today it's a breakout of the last 5 days consolidation also. If the counter manages to close above 40 to 50, I think the new rally till 4,500 is very much likely. So yeah, overall trend is positive. Buy on dip can be a good strategy from risk reward point of view.
What is buy on dip? 41,
so
4133 is what it's expected to open at.
Correct. So somewhere near to 4,050 to 4,075 can be a good level to initiate by.
Okay. Kunal, we have 20 seconds. What's your top stock call for the morning?
So I'm very constructive on Hikal Limited as we discussed, and I think now BSE is also opening very good near to the support itself. So it's a fresh call which we can initiate at the present level. The stop loss on this can be 2450, and the targets can now positionally be at 2800 and above that 3000 levels. Risk reward ratio is extremely favorable. It's a perfect positional call for all our viewers.
BSC, the stock is BSC that Kunal is talking about. Watch out for that one in addition to Hikal. But here come the first trades this morning. Flat as flat can be, hardly a move there really. Bring up the banks, again very, very flattish move. Yesterday the bank Nifty was the key mover, and in today's session a very, very quiet. Okay, let's change this. Let's just get the mid caps and the small caps. Thank you so much. Mid caps about, well, actually no, even flattish out there. Small caps 0.5% higher. So this pocket is not doing too bad. Yesterday, to remember, small caps started off better, but at the end of the day, they were underperforming the large caps. But be that as it may, for now, looking okay. Bring up the heat map on the screen and show you what's moving on the indices. By the way, it's even Stevens, so bear that in mind. Hindalco starts off lower. We're talking about how some of the both ferrous and non-ferrous metals have gotten some notes which are talking about some pricing concerns. I'll watch out for Vedanta, by the way. Just mark that stock as well, but in a moment. Shriram Finance 1% lower. Apollo Hospitals 1% lower. Concerns expressed by Macquarie around the business models for some of the hospitals and the capacity additions that they will do over the next 3 or 4 years. HDFC Bank is sulking a little bit. Reliance is sulking a little bit. So that explains the pressure on the index now with the quantum of red also moving up. What's doing well? ICICI Bank on the back of the Jefferies note, I presume. Ultratech is up about 1%. That is interesting. Bajaj Finserv, TCS, HDFC Life are among the other gainers. But no notable movers except for Ultratech, you have to admit. And ICICI Bank, because it's 2 days on a trot now that it's kind of leading the pack out there. But banks are quiet because while ICICI Bank is doing well, HDFC Bank is not. And just before I hand it over to Tamanna, I just want to pull up Vedanta intraday and just see what that stock is doing, because there is a block anticipated today. Now it's tricky because it may not happen, but Vedanta started off lower, currently also about 3.5% lower. Watch out for this one. Post the block, could actually see a bit of an upswing as well. So be very careful if you're trading this one. Tamanna.
All right, so as while it's flat on the top line, nothing too much moving immediately on the mid-cap and small-cap indices either. But let's just pull that up very quickly once again. I know Niraj looked at it. Slight uptake on the Nifty small-cap 250, about 50 points up. We will look at the mid-cap index as well, and just completely flat. All right, what's working stock-wise? What's not flat this morning is probably Mazgaon Docks. Will be granted PSU status and Navratna status. Will join the likes of Engineers India, Concord, Bharat Electronics. So that has sentimentally moved the stock up about 5.5 points. I'm going to talk about Bharat Dynamics just for a second, because look at how all of these defense stocks have been muted in the last few days and the last few trading sessions. But Bharat Dynamics is one to look out. They put out an investor presentation on the exchanges, and they're talking about an order pipeline of 20,000 crores for the next 2 to 3 years. So that stock looking positive this morning. Coforge is the other one. CCI has approved the company's acquisition of its majority stake in Cigniti, and that has been seen as a positive for the stock. Z is the other one that I wanted to talk about. So a couple of things happening with Z. The NCLT has approved their withdrawal from the implementation application. What does that mean? Basically, it's marking the end of their tussle with Sony. They've moved on. So think of it like the end of a divorce proceedings. Z has now moved on. It's about 2% up, and a clean start is something that the market would bet on. Max Health we talked about. We saw Apollo already hurting from that Macquarie note, and Max Health more so. It's the two stocks that the Macquarie note on hospitals has marked out as underperformed. They've reiterated it actually. So 3% down on a Max Health this morning because they see chinks in the armor showing. Just a couple of more. PNB Housing is what I wanted to see. IIFL has initiated a buy on it with a target price of 1,050. A steep one there. So that stock about 2.5% down. CE Infosystems, Sanghi, some of those which have been seeing block deals. Block deal impact is seeing promoter has sold a stake, so about 3% down there. Sanghi as well. The promoter wants to sell a stake of 3.5%, 4% down. And just one last one in the form of Bandhan Bank. Remember, Bandhan Bank, because of the nomination of an additional director by RBI, was being seen as a big negative. But there's a Nomura note out today that says it's not a big deal. I'm paraphrasing here. And this is something that happens whenever there are operational changes or management changes, so nothing too much to worry. They've in fact given a target though of 170, so lower down. Bandhan is flat this morning. So these are some of the movers, but not too much steam, I would say, Samina, in the opening trade. Some action here and there, not too much gusto.
Well, the bias is clearly on the sell side. So you've only got a handful of sectors that are seeing a little bit of buying. So IT, FMCG is in the green. On the sell side, healthcare is taking quite a knock this morning. Sectorally or market cap wise, micro cap is one space that is seeing a little bit of interest. That's up about 0.5%. But generally speaking, it is a somber sentiment this morning. The Vedanta large trade has taken place, 15.6 crore shares, which is about 4.12% of equity worth 5,693 crores has changed hands. The stock is down 4%. So, like Niraj said, watch out for this one. Post this block deal, you may see a recovery and an upward move on the stock. But for now, the deal has been closed. 4% lower is where the stock has been trading. Well, interestingly, you've got the top gainer on the Nifty 500 this morning to be 361 WAM. We were, in fact, just before this talking to Mayuresh about how non-banking as well could continue to be a theme while banks are drawing all the attention now. 361 is up 6% as we see it, followed by Mascount Talks, which Tamanna has already highlighted, which is up about 5.5% now. Garden Reach continues its upward journey this morning, up 5%. You've got Bharat Dynamics is up 2% as well. While we're at it, let's take a look at how HAL is doing too. Remember, this whole sector really moves as a block, and if you've got one gainer, the whole pack generally does quite well in trade. Well, rails are not doing too bad. Jupiter Wagon on back of the order win is up 3.5%. Piramal Enterprise is up 3%. KFin Technologies is up 2%. A quick check on Vodafone, if I can. Yesterday was a quiet morning on Vodafone. This morning, the count is up about 1% odd on the stock. Zomato as well, strong run in yesterday's trade on back of a couple of brokerages. The stock seeing a little bit of profit taking this morning, down about 2% as we see it. Housing finance companies also doing well. So across, apart from just banking names, everything that's non-banking also doing pretty okay in today's trade. Healthcare is seeing a bit of a sell on back of Macquarie putting out those notes, putting out those comments. But your top loser today is Craftsman Automation, down 4.5%, followed by Vedanta. This is largely block deal oriented. CE Infosys. Let's pull up Happiest Minds. There was a block deal on the counter yesterday with the promoter offloaded nearly 10%, and the stock sold off this morning, finding its base this morning up about 0.7%. But all in all, it's a quiet morning, barring Masgao and 360 WAM, which are showing strong gains. The rest of the market looks fairly quiet. Kunal, you quickly want to come in on 360 WAM for me, and if not 360 WAM, can the other capital market players do well over the next couple of days, and hence they become buy calls if you're a trader?
Yeah, I agree. Overall, the entire space is looking attractive, and if you look at the trend, it's absolutely very strong. Especially on the 361 itself, if you look at the present level, that's the trend is continuously on. But again, these are the counters which I always prefer to buy near the support. The counter is crazily up to in today's session also. So yeah, for the aggressive trader, one can initiate a buy at the present level with the stop loss of 870. But otherwise, I'll wait for the counter to cool down a bit and find the support, and then I'll initiate a buy.
Wow, big move there. Wonder if Nuvama and some of the others are also moving, or is it only isolated to 361? But yeah, should certainly look out for that. Looking at stocks which have really done well. Mayuresh, I don't know if you followed this TBO Tech story, but it got that Goldman upgrade. The stock is seeing no pullbacks. Have you looked at the business model?
No, Niraj, unfortunately, last few weeks have been a little hectic. So.
Okay. But that stock has certainly done well. It's up 2% yet again today.
It's also been hectic.
The stock
last couple of weeks in a completely different way.
Yeah, but look at that move, man. Just this week's chart of TBO Tech. You see it's rising from Monday. It's up 2% today at 1900. I think it was at maybe 1650 when the note came in, or maybe lower than that. Just look at that
strong move that has come in there. Okay, Dalmia Bharat is down about 0.25% because there are two downgrades today, CLSA and Nomura. The stock hasn't reacted too much, but the last 6 months, it's down about 18-20% versus the Shree being down 5%, Ambuja actually being in the green, etc. Mayresh, fundamentally, a Dalmia Bharat or any of the other cement names, Sanghi today has had a block or some other.
Yeah, so we remain constructive on the space, Niraj. But within the space, obviously, I think there are two broad aspects to be seen. The larger players, valuations are richer, but expectations of consolidation and therefore a nationwide presence and better volume growth expected to come through for the industry as a whole plays very well for the larger name as well. For the smaller names, consolidation and what kind of buyouts can probably happen specifically in that 5 to 10 million category is something to be watched out for. But recent acquisitions and the buyout prices are indicating that it is not a premium that these companies are also getting. So to that extent, I think a couple of stocks that remain on our watch list, Ultratech within the large cap names still will remain as a preferred play because of their national presence, because of the kind of additions that they're probably doing, and expectations in terms of far more stability in terms of the numbers outlook. Within the mid-cap universe, JK Cement is something that we've kept on our watch list as well. A good mix in terms of grey and white cement as well. Margins had come off in the last few quarters and even on an annualized basis, but a large expectation in terms of more numbers probably being better in terms of white cement realizations, in terms of better expectations, in terms of reasonable volume growth going forward. And recoupment in margins is something that we are looking out for. So I think Ultratech and JK Niraj is something that we'll get.
JK Cement, okay. By the way, Deccan Gold Mines is up. It's a small stock, but I just want to mark, there is a release today which says that it's secured investment commitment of 60 crore rupees to develop some of its key projects, the Jonagri Gold Project and the Altin Gold Project in Kyrgyzstan. Now, be that as it may, I don't know about the numbers and what it means per se, but this announcement seems to have gotten the stock excited. It's just one small cap stock that you should certainly watch out for in this session today, up about 3.5 or 4%. So that's certainly a keen eye out for. Kunal, first 8 or 11 minutes done. Anything? Is it Heikel and BSC or is it something else based on the moves that you like?
Niraj, I'm being very conservative at this point in time, but yeah, Indiabulls housing is again looking very attractive. It's been 13-14 days. The counter is consistently taking the support at around 170-171 levels. In today's trade, it made a high of around 178 and it's presently trading at 175.76. I think if the counter manages to cross above 180 today, I think the targets can be 200 to 210 and the stop loss can be 170. And the second, which is a mid-cap counter again, is FDC. Now, this counter was in trend yesterday. Today, again, it's as of now showing good strength. So with the stop of 460, I think one can go ahead and buy FDC also. And the first targets can be 475 followed by 490.
Thank you, Kunal. Thank you, Mayuresh. Garden Reach, after a sharp up move yesterday, is now turning out to see another big trade this morning. 7% high on Garden Reach. Mazgan Docks up 6%, 360 up 5%. Just Style, interestingly, is up 5% as well. And PDL also not lagging too far behind with a gain of 3.5%. The index itself, though, is seeing a morning of consolidation. 23,709 is what we have. Remember, the most or critical support for the street is going to be 23,550. That level has moved up from 23,350 to 23,550 in trade. So no surprises there. The breadth is slightly weak, but generally speaking, the bulls clearly in control of the street. We'll take a quick break, but we'll come back, and on the other side, we'll be joined by Sanjay Dighe, CEO of Krystal Integrated Services, on the outlook for the coming quarter and, of course, talk to them about how business is looking.
Integrated Services has been in focus over the last couple of days after Nuvama note saw an upside of 80% and initiated a buy rating. They in fact see a CMP of 760 rupees. We thought it's a good idea to get in the management and figure out, what the company's outlook is, what they do and where further business comes from. So Sanjay Dighe, Chief Executive Officer, Krystal Integrated Services, with us on the show today. Mr. Dighe, very good morning and thank you for speaking with us here at NDTV Profit. Great to have you on. Let's start with, what is your outlook for this financial year? How do you see it going, especially considering that most of your business is coming from government services? So let's start by understanding that for our viewers. What are the kind of contracts that you're doing for government-run companies and which ones?
Well, thank you so much for getting me on this NDTV Profit Show. Very happy to talk to you. Yes, we have a mix of, we have one of the top players in the country in the IFMS segment, and our revenue comes from government and corporate also. So while government has a 70%, corporate is also a very good mix of 30%. And in both these segments, we have an independent focus, and therefore we've been growing in both these segments in a very good way over the last couple of years. Our business in the government sector predominantly comes from where various government projects in the health, education, and the waste management sector, and also in public administration infra. And in the corporate space, of course, we are proud to say we are one of the most diverse. We have customers which are a very diverse set of customers, and these are the two areas which we get our businesses from. To give you just a quick insight into how our business is structured, our business is structured in four distinct verticals. Predominantly, the IFMS, Integrated Facility Management space. The second one, which is emerged as the second one in the last couple of years, is the staffing and payroll. Third one is our security man-guarding, and fourth one is our catering services. So our business is structured over these four services. Coming back to your question on the government, yes, there's a lot of infrastructure coming up in the country, and you also would know better because you track these segments. Our business is linked directly with the infrastructure, whether it is government or corporate. And in the infrastructure space, where there is administrative infrastructure like metros, new railway stations, we all know there is a huge activity happening in the railways. They are upgrading the railway stations. They are trying to give a railway passenger.
Well, 1 minute, Mr. Dighe, if I can ask you. So when you say that the government is upgrading railway stations, for example, what does a Krystal come and do? What are the kind of services you provide? And what are sort of the margins for that service if government is your client?
Well, that's a good question. We have been servicing the Madras railway station, which is the heritage property, for the last 6 years. So if you just visualize a railway station, cleaning up of platform, cleaning up of toilets, cleaning up of railway tracks, cleaning up the guest room areas, the passenger areas, cleaning up the areas where there are waiting rooms, ticketing counters. These are huge spaces, and it's a combination of man, machine, and material. A very, very ideal contract for an IFMS, where you are integrating all your facility management services. So it's a good contract for railway station, and of course when they upgrade a railway station, they are increasing the infrastructure to accommodate more passengers. So there is more space to clean, there is more space to upkeep, and there is more requirement of machines, material, and people. Also, now you see there are escalators on the railway stations. The waiting rooms are air conditioned. So they need somebody to maintain all this infrastructure. So that is exactly which is a space that we are in. Having said that, that is not the only space. I just gave you railways as an example. But there are so many developments happening like this in the government sector as well.
So, and what would be, since you've given us the four verticals breakup, can you give us a picture of the margins in each of those verticals?
Sure. Our IFMS gives the margin in terms of ranking the number one. Second is our payroll and staffing services. Third is our security and man guarding services. And fourth is our catering services. Also, just to give you insight, there is a lot of MEP requirement which is coming up, mechanical, electrical, and plumbing in terms of maintenance. We have been doing this work for many years now, but we are looking forward to have this vertical as the fifth space in this financial year, because we are really moving on a technology-based services, more engineering-based services in the coming year. This is going to help us get better margins. This is going to get us better customers. And overall, currently there are these four segments with this kind of margins, but I'm expecting to get a fifth segment there also, which will give us a good margin.
Sanjay, hi. It's also Samina joining in, and I know when you listed one of the key factors, you had stated that or objectives for that fundraising was to expand your presence in the airport space. You already have a bunch of railways that you're servicing, and I believe there are 2 airports that you're servicing as well. You want to give me a sense of where things stand between what was talked about in March and where we are today? Have you added more airports to the kitty? What is the sort of growth momentum we are expecting there? What sort of contribution to your top line can be anticipated from airports over the next couple of years?
Well, that's a good question, and it is very linked directly with our business plan also. Yes, airport, when the privatization of airports happened and when Niraj was formed in a JV with AI, since day one we have been servicing the airports. So we have a huge experience of decades in servicing the airports. Again, to give you a sense, servicing in the sense of cleaning, maintenance, and very similar to the railway stations. So we have a great pre-qualification. Now, post the new scenario in the airports, there are a lot of services that are being newly induced in the airport management space, whether it is airside, landside, and the main terminal. We have a good qualifications there. We are under discussion with the private players and also with the AI, and very soon we should be able to have a good business there. Also, apart from the facilities management, there is a lot of support services also where the privatization is going to be happening. So we are watching that space, and we are already in discussions to get business in that space. So I think very soon we should be able to give you some.
That's a good point, Sanjay. But just very quickly, how much does airports contribute to your top line, and where do you plan to bring it to? And you said there are conversations underway. You want to give me a sense of when we can expect closure or any sort of announcement from Krystal about closure on these deals? Are there also better margins in the airport business?
Airport business is a very consistent business. It's sustainable business. It gives a healthy margins. And in terms of discussions, yes, we are already we are almost enrolled in 2 to 3 airports. There is a lot of activity there happening. And more than this, I will not be able to disclose because we are in the final stages. But very soon we should be able to get some good airports, because it is not only metro airports. There are the tier 1, tier 2 airports, and because we are into discussions, a couple of things are confidential. There is competition also here, and due to our pre-qualifications, we will be able to qualify in a much better way. So it's a little early for me to disclose this, but yes, very soon we should get our hands on a good airport business.
Mr. DK, good morning. So what's the share of airport share? Let's assume it's negligible currently. You may not give exact details, but let's say by the end of FY26, what is the contribution of airports? And part 2 of my question out there is public versus private clients currently, what is the mix and what would that mix be in FY26?
So I will start with the last question first, but good question. This is for the viewers as well. Our contribution traditionally has been 70-30, 70 in the government space and 30 in the corporate space. But you would also know the government tenders are larger in nature. They are a 3-year pipeline plus 1 year renewable. So if you get one good government tender, then the quantum is very big. So therefore, it fluctuates between 75-25 and 70-30. But generally, to tell you, 70-30 is the zone, and we will continue in that zone because government businesses are also good business. New projects on a national level are good. We've been into government business since 2003 because 2000 is our year of inception. So the kind of pre-qualification we have built over the period of time, the service delivery team that we have and the management bandwidth that we have, it's really very, very good in the country. And the kind of work that is happening, the mindset for outsourcing is also very healthy in our country today. So we are expecting to keep the same 70-30 combination by end of FY25 also.
Okay, 70. So it stays at 70-30. Fair call. And sorry, you didn't mention about airports. What does airport contribute to, let's say, in 2 years' time, very quickly?
We said airport is currently a very small part of
what does it become in 2 years, Mr. Dige?
In 2 years, it should contribute at least 5% of our revenue.
Okay, fine. The other question that I have is there a formalized market share conversation that happens? I mean, where is it that you would be on the market share, organized versus unorganized? What is the scope?
Oh, a good question again. If you know this space, this is predominantly an unorganized space. Almost
right.
80% of the market is unorganized. 20 is organized. Again, in this 20, it is bifurcated into multinationals like a JLL, CBRE, Knight Frank, which are essentially property management companies which come from with mandates abroad. Then there is a second range of players which are predominantly geographically located. Somebody is good in south, north, east, west, and some which are tilted on service-based offerings. Somebody is good at giving service to IT space, malls or something. And then there are I think we are, as per the FNS survey, we are among the top 7. So we are at the 7th. And but we, as per the survey, also we have the widest range of service offerings and the most diverse sectors. So we are very, very good poised at our 7 number. We are very flexible. We have customers who've been us for the last 18 years. So in terms of market percentage of market share, specifically, I will not be able to tell you, but we are the 7th. We are the fastest growing because we have grown at a CAGR of 25% in the last 3 years and 29 in the last 8 years. So we are at the tops, even if you see the entire range. And also we are the most profit making because we have created our own benchmark thanks to the government and corporate mix. And we aspire to better the benchmark year after year. And I think it shows in our results.
Mr. Dige, I had asked you about the margin contributions of your top 4 segments. I think you gave me the ranking. If I can get a sort of consolidated number, and what is your guidance in terms of what you see your margins in 25 and 26? Where are they going to grow from?
Yeah, I missed on the margin thing. As the number in chronology order, the margins are similar. IFMS always tends to give a better margin because these are bundled services. There is a lot of customization which happens here, and it's a combination of man, machine, material. So this kind of customization, tailor-made for the customer's requirement, tends to give a better margin. The second one is payroll and staffing services. That is the second ranker in our margin profile. And all the contracts that we are servicing here are also on management fee basis. So these are percentage of the overall payroll management that we do. So they give us a healthy margin. Third is definitely our security and man guarding, which is also one of our core products. And fourth is the catering. So what's
the overall number? What's the overall number?
In terms of market
margins.
Margins are very difficult to say right now because I told you there are these bundled contracts and staffing services. So there are multiple contracts. So there is no margin profile I can give you individually. I can just give you a sense in terms of their the order in terms the margins are.
Sanjay, what does your current order book across sectors and segments stand at? And also, I know when we raised funds, or when you of course listed, one of the objectives was also to reduce the debt on the books. What does the debt currently stand at, and any more fundraising plans lined up towards expansion over the course of the year?
Yeah, so sequentially, I will take that. We have closed the year at 1,026, 1,027 crores. And we have a strategy and plan in place to grow at 25 to 30% year on year. And we've done that in the past. As I told you, 22 to 23%. So 25 to 30 is a good zone that we are very confident the way that our sales teams and organic growths are happening. So we will maintain that. So I think that is the answer to the first question, and that is the guidance there. The second thing is, what was the second question that you asked me?
I was asking you, what is the debt on your books right now, and any fundraising plans that you've got lined up over the course of the year for expansion?
Yes, we raised 175 crores as a fresh issue. And one of the objects of the issue was to retire a 10 crore debt, so which we have retired. So our debt has come by 10 crores. And in terms of acquisitions, we are very happy to inform you that post our listing and after the Q4 AM24 result, there are a lot of companies in tech space, engineering space who have innovative products which can be used in our services are approaching us. These are Indian companies and international companies also. So we are in very serious discussions with them. The idea is to evaluate what kind of product, what kind of technology we can associate to better our service delivery, and at the end of the day to better our margin. So there is so much happening in the technology space and also in the engineering space.
Sure.
We are very seriously exploring that. If things there, we will be able to better our margin profile as well.
Got it. Mr. DK, one final question. There is a note which says that from a 50 odd crore profitability in FY24, you could nudge 100 crores of profits by FY26. You may not give the exact number, but is this too optimistic, or is this could be realistic as well?
This is a good balanced kind of a number that is there, because and there is a sense to it, because as I told you, our 70-30 profile which is there, we are expecting new projects in the government across the country, and we are very actively evaluating these government businesses. Also, the space which are there, which I told you, waste management, healthcare, education, and infra. This is our basic field of operation. They are doing very well. They have good budgets, and therefore, and the mindset of outsourcing is there, and we've seen that. Recently, we acquired the Thane Municipal Corporation contract for waste management. This is garbage pickup and disposal at the disposal. Now, this is just one municipal corporation. India has 28 states and 8 union territories. You can imagine the doors that are open to us. So, this is just an example, but there is lots to do in this space. There is not going to be any dearth of work for the next 10 years, if you ask me. It is only your prudence that which contract you will get, what kind of customers you want to acquire. We are very mindful in this activity, and therefore that is the only way we can keep on continuing growth, but also become a very sustainable and profitable organization.
Mr. DK, we'll leave it at that. Thank you so much for taking the time out. All the best for the quarters ahead. Really appreciate your time.
Thank you so much.
Right, that's Krystal Integrated. The stock has done really well, 15% in the last 3 days alone. Okay, now a stock which saw a large block yesterday is Happiest Minds. Promoter Ashok Soota sold a large chunk of his share. There might be more, but it's great to get in a sense of what the business now might be looking like any which ways with the MD and CFO of the company, Mr. Venkatraman Narayanan. Venkat, great having you. Thanks for taking the time out. It's been a while, and thanks for being patient with us while we were talking to another company. Just trying to understand, is this, do you have a sense of what the promoter intention might be, and then we'll get to the business as well? Is this the last of the stake sales, or could there be more? Any idea?
Okay. Let me give you a background to the whole thing. When we talked about Vision 2031, we said that there is a vision statement of building a company to be there in perpetuity. For that, you need a stable promoter holding. And that percentage that we had visualized, Ashok had visualized, was about 40%. And we had also said that he has, during his time, he wants to make sure that a large part of his wealth goes towards building of a legacy in a not-for-profit organization called SCAM. And he's also trying to set up something in the healthcare field called Happiest Health. So these two are his personal ventures. One is not-for-profit, and to which he has committed quite a large amount of money, along with a lot of other contributions he has committed to institutions. So the way to contribute to that was to pare down a percentage of his holding in the company. And it was supposed to be, whatever done, his idea is to make sure that it stays at 40%. So he was at about 50.4%. He has pared it down by 6%, and now it's near about 44+% in the company, Niraj. So he's doing it to contribute towards SCAN and also to help build Happiest Health, both in the field of healthcare.
Got it.
Which is very...
Yeah. So Venkat, sorry. So just to round this off, because you're saying that, so maybe another 4% comes in at some point of time between now and 2031, right? That's what the point seems to be.
Yeah. As part of any transaction of this sort, sure. He gives out a lock-in saying he wouldn't sell for a period of time. But yes, but you should also be mindful of the fact that we may also raise capital that will also dilute him. So, but the puts and takes, yes, you are about right.
Okay. Venkat, good to get that clarity, and thanks for that. Now, coming to business as well, because a large block typically brings down the valuations of a business a little bit. So people who want to buy into your stock must be happy. Just tell us what the business is looking like currently, because a lot has changed between 2 quarters ago and now, with Accenture talking about generative AI bookings looking strong for them. But that's a different beast. How do you see the landscape in India and for Happiest Minds individually?
So last year, I'll start with our performance last year. FY24, we did about 11.3% growth in revenue terms. So if you look at it in comparison to most of the big people or comparator companies, we have been really top of the pack. There is maybe we are 1 or 2 when you compare us with those companies. So which shows the strong organic growth muscle that we have and how we have been building even during these tough times. Coming into FY25, we have consummated 2 deals. One is Pure Software and the other is Aureus Technologies. Based on that and the strong organic growth that we are seeing from the 3 business units that we have, which I'll talk about in a minute or so, we have given you an estimated growth of between 35 to 40%. Because, when you talk about revenue growth, you have to see from consolidation how much I get, whether it is 11 months or 10.5 months or whatever that is. That's something that is up for discussion right now. But that, along with our organic growth, we are estimating between 35 to 40%, while retaining our margin at about between 20 to 22%. Because, when you acquire a certain large company, there are certain unknowns, and I'm factoring for that and the cost of acquisition. So if you really look at it, that puts us back on track to the $1 billion revenue dream or aspiration that we have set out for ourselves by 2031. It takes our growth. We need about 22% CAGR to reach the $1 billion revenue line. And this year with about 11%, we are slightly behind. But this year, FY25, we should, goes back to the 30% plus number, making up for maybe last year, which was FY24 for most of the people. Now, coming to the business part, yes, we are seeing decent traction in our new BU of generative AI, GBS, as we call it. We are also seeing quite a few conversations happening. Out of our 250 customers, I'm sure for 200 plus customers who we have touched base with are talking with us about how we can help them with generative AI. So those discussions are ongoing. Our team size was about 77. It's slowly building up to close to 100 people right now. So that's something that is the focused generative AI people. Then we've got the normal AI, analytics and AI. All of that are sitting in the COEs, those capabilities. Those people, Happiest Minds, are sitting in the COEs. Put together, we are a decent-sized strength in generative AI and the wraparound business. Starting Q1, Q2, we'll start reporting those numbers as well. And it will be open to public view as well as to what we are doing in our generative AI. But suffice to say, close to 50 to 70 case studies or even more. We have got about 22 revenue earning projects. That's also the number of signups are going up at a very quick pace. There are standalone generative AI projects. There are, sales into our existing customers and projects. So quite a bit of activity happening. That's on the new business. But if you look
right,
at it,
Mr. Narayan, let's talk about Gen AI in a little more detail, and then we'll quickly move on to the rest of the business in the US and, of course, the markets that are going to be significant going into the next few years. You talked about how you're clearly one of the leaders in the space because you're ahead of the curve with a number of clients, like you've talked about, where you're working and doing projects on Gen AI. Give me a sense of how much can we expect between now and, say, FY26 for Gen AI to contribute to your top line, and are the margins much healthier here? Because this is a business that a lot of tech companies are still trying to get their head around in some ways.
see, I don't want to give a number right now, but just say that if you call out a business as a BU, it has to be close to 5 to 10% in a given period of time, because we are today 200 million. IMS is about 20% of our business, 80% is PDES. So, if you have to make a reasonable contribution to the entire business size, it has to grow to 10% within a credible period of time. So that's where I would like to leave the revenue growth at. Second is with respect to rates and profitability. We are working with existing customers. So obviously we have existing agreed rate cards. We are tweaking those for the kind of capabilities and competencies we bring in on generative AI. So in terms of margin, I would like to say it's not margin dilutive or price dilutive right now. With respect to new projects with new customers, again, it's at market-led prices. Our pricing has never been cost plus; it has been always market determined. So to that extent, that's given us a leg up. And like we have been saying right from IPO, that's about 3 years back, we have had a premium to the Indian market in terms of pricing. We are maintaining that. So that should address it.
Right. So Narayan, how is business looking most importantly? We get so much of mixed commentary coming in, but you're at the realm of it and the action is clearly focused around the US largely. Are we seeing a pickup in deals? Because from what we understand, not too much can be expected that elections are behind us in the US. Do you feel the same conversations moving to closure yet?
So here I would like to give you, a larger statement. One is, you can't keep away from investment in technologies for more than maybe a year and a half, 18 months or 19 months max. After which, because in the current day, businesses are run by technology. It's no longer a staff function or a good to have. So I'm sure everybody accepts that. And if it's so integral and core to your business, you can't stay away from new investments into that for more than 18 months. If you look at it, people talk about recession in the US and then talking about elections, rate cuts, a lot of reasons as to why they have stayed away from new investments over the last couple of quarters or even 4 or 5 quarters. But things seem to be changing there, and the need to again, reinvest in technology and be on the cutting edge is something which is going to be an imperative. Just like generative AI, lots of investment is going, it's all new investments. So to that extent, we are all expecting that investment to come back. And just like post-COVID, there was a rush for technology. It may not be to that extent, but you will still see a lot of money and investment coming into the market and into new technology. But despite all of that, a tough year, we have grown about 11.5% last year. And we are trying to continue to build on that, base and push ourselves in. One final point is, we have about 70% of our business coming in from US, 68, 70%. But India is a very large market for us. It's disproportionate to our size, about 18 to 19%. And we are seeing amazing amount of traction in business build happening in this market, whereas Europe is kind of stable right now.
All right. Thank you so much, Venkatraman Narayanan, for speaking with us. That outlook is interesting. And that's the story with Happiest Minds, was in the news because of promoter stake going down. And I think that's the important thing, that there's more to go there. Ashok Sootah's stake now at 44 and he wants to bring it down to 40. So that would be the big takeaway, I suppose, from that interview. Stock is just about up by a couple of points. We are going to be seeing 2 big listings, D Development and Acme Fintrade. In just a couple of minutes from now, D Development might open up as per the grey market prices. Acme might be in the opposite direction. So we'll have to wait and see what happens there. Acme is, again, a rural finance push kind of a company, business finance solutions for rural India. And yeah, just a couple of seconds left to go for that to come in. So this Udaipur-based company raised nearly 38 crores just from anchor investors, but the grey market premium may have been a little soft. Development, on the other hand, had a pretty good subscription, right? You know, you were mentioning it as well.
99 times.
Yeah, so 99 times. So that's one to watch out for. And those rates will hit in just a couple of seconds. Wow, look at that. 68%. Ooh. 70% premium on the development. Acme is not too bad, still about 8%.
Yeah, strong going there. And of course, viewers, for all of you who want to know more about the businesses, on our social media handles, on our website, just hunt for the IPO Adda conversations and you will get a sense of what the companies are promising for the times ahead. But DDE development, doing really well on listing. Let's see if there is more in store. Remember the latest listing that I can remember, Ixigo, had a good start and then built on from there. So let's see if the same happens with both of these. For now, a pretty decent showing. With that, it's a wrap on this leg of India Markets Open from Samina, Tamanna and me. Thanks so much for tuning in. Hello and welcome to Talking Point. I'm your host Niraj Shah, and the case for a chat today with our guest is simply around what the near term and the medium term might hold in store for multiple things. So firstly, will FIIs or can FIIs invest in India amidst the higher multiples? Is past history anything to go by? I think Vinod Karki dwells a lot on learnings from the past, so it would be lovely to talk to him on that. Whether there's room for credit to grow and aid capex. I think we'll pose a question to him around that. And whether low deposits can dampen the BFSI outlook, or do valuations provide comfort there? He's Senior VP Equity Research at ICICI Securities, joins us right now on the show. Vinod, good having you. Thanks for joining in. I hope all is well.
All well, Niraj. How are you?
Very, very well. Thank you, Vinod. And I want to start off, Vinod, by asking you whether you believe the nature of the money getting invested into India can change in the second half now that major events are out of the way. Let's assume the budget is a bit of a non-event from a capital market investor perspective on taxation front at the very least. Do you think at some point of time FIs make a comeback into India despite the higher valuations, or is that a difficult call to make?
Well, talking about events, I mean, you can call it a myth, basically. Over the last, since COVID, there were like 3-4 events which were kind of resulted in high uncertainty for investors. And they were the best times to buy within this bull market, if you may call it so far. So to answer your question, if there is an event where you find uncertainty, in fact, our reading has been that all through over the last several years, whenever there is an event risk related uncertainty and markets take a little bit of a knock, that has been the best time to invest. Not when everything is hunky-dory and volatility is extremely low and everyone is extremely confident about the future. That has not been the best time to buy, at least in the recent history. So, so we had, several. So if budget or something else comes up, leads to some kind of uncertainty and some of this euphoria. I mean, this optimism that we have been seeing post-election is allowed. I think that would be a good time to buy overall.
Okay. Vinod, are you constructive on markets currently?
Well, the way I look at overall market is quite simple, in fact. So I'll start getting worried on the overall market when, so if you look at the multiple and the growth, so there are two aspects to this. If you just go back to when the global financial crisis at the start of 2008 calendar year was, when we're looking at the forward multiples, it used to be, in fact, similar, 21 times or something like that. So point in time multiple tells you nothing, basically. So, and in September of 21, we were at 23 times forward. So what can you say, basically? So the point is, and which legendary investors like Ben Graham and some other guys who have built some frameworks like the Schiller model, what they say is that we better look at where you are in the cycle overall in terms of corporate profitability, leveraging, and other things. So currently what I see is that while we are at somewhere, the higher end of the multiple, around 20 times, 21 times, in terms of the profit cycle, we are somewhere in the mid-cycle, around 5% of GDP. Max, we have maxed out at around 7%. And if I look at what leads to maxing out of profit cycle is very simple. You have overheated economy, you have high leverage in the balance sheets and high operating leverage, and risk taking is very high. A lot of acquisitions and a lot of a lot of capex outlook being very high and all that. Investment cycle being very at the top of the cycle. So I think those things, if you look at the profit cycle, we are mid-cycle. In terms of corporate releveraging, I think we are hit a bottom and maybe some pickup we might hope for some pickup. And overall NPA cycle in the system is still bottoming out. So overall, I think we are at mid-cycle profit and almost at the just below the peak multiple. So that's how we should look at it. I'll start getting worried on the market when we are at peak profit cycle, driven by high leverage, high operating leverage, and peak profitability.
Mm-hmm. Okay, high operating leverage, peak profitability. As of now, those situations don't exist, I presume, is what Vinod Karki is saying. Vinod, what takes this market higher? Is it the mover of the last few days, which is BFSI, because it was dead and buried, or rather not moving, was in hibernation of sorts for such a long time, has started to make a move and may not be as much of a value as it was maybe a couple of months ago, but still not egregiously expensive?
Yeah, that's a very good question, Niraj. And if you look at the pre-COVID period till now, the only sectors where valuation actually has contracted to what they were pre-COVID is the whole financial pack within the Nifty, if you take it as an example. And energy stocks, they remain quite cheap overall. The other angle to this, the growth angle, is while the market has completely embraced the idea that there is a big capex cycle coming, which is shown in industrials, the capital goods companies and others going, the valuations flaring up. The clarity is not there in terms of how much releveraging will happen. But from a framework perspective, we haven't seen any economy rise in terms of investment rate, manufacturing, construction and all really picking up without a releveraging effect. So I think it is imminent, the releveraging effect. I think market is kind of sniffing it out in the current context and you're seeing some kind of outperformance. But if you are bet on the industrials saying that there is going to be a big capex cycle, I don't see the financials which will fund this capex or channelize savings into funding this capex remaining underperformers for too long.
Vinod, so what? Okay, the last 4 years, we've seen a resurgence in the valuations of the public sector banks, public sector financiers at large maybe, versus the private sector financiers. The last 5 days have been the first instance of how private ones are outperforming PSUs. My question to you rather is, then when people are talking of a convergence in valuations, private sector has started to outpace on the valuation front the public sector entities once again. From here on, for the next 24 months, if indeed capex has to pick up, which will probably go to both PSUs as well as privates, would you bet on PSUs continuing their outperformance, or would you believe private sector players will now dominate?
Well, the corporate capex has predominantly been the area for public sector banks where they are focused. Private banks obviously participate wherever they find opportunity. But as an overall theme, if I'm betting on a corporate releveraging cycle, I would bet that corporate banks, no matter if they are, banks which can focus and which have exhibited in the previous cycle that they have the capability to lend to corporates. I think the distinction will move from PSU to private to corporate and retail. So any bank which can lend to corporates in a way that it doesn't result in high NPAs. So I think those will show higher demand in my view. Because on the retail side, we have seen some stress, and RBI also kind of flagging it off. And a lot of players have entered retail, so it's getting a crowded place. While if you see the corporate side, very few are participating, and the demand itself has not picked up significantly, which I think will pick up. So the distinction will be like we used to have earlier, corporate banks and retail banks. That distinction might start coming back again, rather than PSU versus private.
Okay. And any impediments, Vinod, to any kind of lending? Because the other aspect that happens is that the regulator of late, right? And it's good, by the way. I'm not saying that the regulator is doing a bad job, but I'm just saying that the regulators or regulatory action on financials, both lending and non-lending financials, has been fairly swift in the recent past. Does that impact multiples at all, you think?
No, so one is multiple, but the underlying cycle which I talked about, it actually extends the cycle because you see, in any economy, when the releveraging happens, finally we'll have accidents at the top of the cycle. We cannot avoid it. That's the nature of economic cycles. What the regulator is doing by being a little ahead of the curve is trying to, because they have learned from the previous cycles that where the hazards are, and they are safeguarding some of these issues. So, which means that you won't have early accidents in this economic upcycle, and this may be a little more prolonged. But eventually, every cycle goes through that boom and bust. This I think we are in a mid cycle. It will boom at some point, and there will be some issues at a later point.
Okay. Well, since you're talking about financials and NDTV profit exclusive, banks have hit a pause on fresh project finance and seek clarity on RBI's draft rules. Vishwanath Nair joins in with more details on this. Vishy, this seems a very extreme step. Tell us, what are you learning?
Right, Niraj. So yes, there is a decision amongst bankers, at least the majority of the bankers, that they want to not go out and do fresh project finance, specifically loans that are linked to special purpose vehicles in these projects. They don't want to do that unless, of course, the parent, which might be a well-rated company, takes those loans on its own balance sheet. What the lenders are saying is that if these RBI guidelines come into play in the form that they were proposed back in May, then these old projects might get pulled into the framework, and lenders will have to then later on add about 5% provisioning, upfront provisioning on these projects, which will be a pretty big hit on their balance sheet. So they've sought some clarity from the RBI. They want, firstly, public sector projects and private projects to be treated differently under these norms. They also want some more clarity on how exactly this 5% will come into play. Remember that the RBI is saying that this will be spread out over a few years, but they still want further clarity. Lenders also want the RBI to rethink that 5% number itself and probably come up with a slightly more realistic number, because currently the upfront provisioning is only 0.4%. So 5% is a significant jump on the provisioning from the current norms. So banks are saying that, listen, give us this clarity. That's when we will go out and start lending aggressively. This is also a time when project finance is actually taking off. Companies are going out and willing to set up greenfield projects. So if they are going to slow down, if the banks are going to slow down on that lending, then those projects get hit quite a bit, because banks are a major source of financing for these projects in India.
Okay. Vishy, I mean, clearly we do not have any timelines around this, right? I mean, as of now, it's a pause. They'll take things as things unfold, I presume.
Yeah, so June 15th was a date when the banks and the other stakeholders in the economy had to submit their responses to RBI's project financing draft. The government has only done that this week. So there is a significant delay even on the government's part on giving feedback. Once this feedback is in, the RBI goes through all of this, and typically it takes about 30 to 60 days, anywhere between that, before the RBI comes out with a final set of guidelines. So we may not see something emerge clearly till end of July or maybe August.
Got it. Vishy, thanks for that. Vinod, quick thoughts on this one before we hit that break. I hope you heard, I believe you would have heard what Vishy's brought in.
Yeah. So this is an extension of what we were discussing.
Right.
So the regulators this time have, they want to ensure that we don't get into a situation that we got after 2012-13 when the NPAs started ballooning in the corporate side due to a lot of infra and other project finance and things like that. So this is just an extension. What one should note in this is that it actually is more of an accrual thing. So you are providing more. So if you have lent carefully, then obviously these provisions will be written back. So it's only about timing issues rather than absolute losses, basically. So why should you fear if you have lent prudently? Then these provisions won't be required. So that. But the point is, if you provide early, then obviously you have you see the cost. The impact on P&L immediately. So cost would be an issue. But on the overall, it's more of a safeguarding measure, I would say, from the.
Okay, good to know that. Stay on, Vinod. We'll take a quick break. Come back with more. All right, back with Talking Point in conversation with Vinod Karki of ICICI Securities. In a recent note, they've written that the listed corporate capex has swelled beyond the 9 trillion mark, and that there are new age sectors which are additional accelerators in the current cycles. And while the uptick is strong, it's still short of the lofty budget goals. So, question is, Vinod, you would expect a bit of a lull in a period around the election season. Would you expect strong capex now? And what would lead it? Would it be private capex leading the capex charts now?
Yeah, so the reading is coming out that if you have been observing the GDP prints time and again over the last couple of years, the GDP has been driven by the gross fixed capital formation growing faster than private consumption expenditure, which is reflected in the whole stock market, reflecting that same thing where the cyclical companies have been significantly outperforming the defensive staples companies. IT, which is another issue. But the thing is, the private capex is nudging up. So it's first of all, the reading is that it's bottomed out, it's rising. But if you compare it with the central government capex, in a scenario where private capex is doing really well, this is significantly higher. So just to put things into perspective, the central government capex was 9.4 trillion in 2024. Against that, the listed corporates did 9.1 as per our analysis. So this is almost no. The private guys are not significantly higher. At the peak of the cycle, we have seen this ratio being at almost 5 times. So I think this is, and this was in a period where we were going into general elections 24. So I think post that, and in fact, yesterday itself, I saw one media report about a large industrial conglomerate significantly hiking their FY25 capex guidance to one of the largest, I would say. So I think it's showing up. We heard the SBI chairman talking about...
Vinod, sorry, can I come in? So the larger ones are not a problem. Maybe the top 10 are doing the capex. Maybe newer sectors are doing it. But the widespread capex spend on the private side is not happening. So one, could that happen? And two, I'm just asking for a viewer who's listening to this right now and wanting to understand how to play it by the equity theme. What would you recommend?
From a SME segment, if you look at their the commentaries coming in, I think this is the purple patch for SMEs, simply because the growth in the economy is coming from the investment side, real estate development, infrastructure, manufacturing, construction across the board, and this new age. So the SME order book swells up in this environment. So I don't think there will be a dearth of capex requirement, capex demand over there. So I think it will be a broad-based capex growth overall. In terms of playing this capex theme, the market is way ahead. I mean, we have been saying for the last couple of years that the capex is showing signs of improvement. But if you look at the industrials, capital goods, I mean, they have already made the move significantly before these numbers are coming in. That's what we have been signaling, that you cannot wait for the numbers to confirm and then say, then I'll take a position. By that time, markets are always forward-looking. So in fact, if there is any weakness on the investment theory, these same companies will actually show signs of significant correction way before the numbers start showing. So I think so that's the thing. So the indirect way to play, I think, is through the lending side, because that in fact has derated valuations over the last 5 years. Their valuations, whatever the large banks and financials, their valuations were pre-COVID. I think that the current valuations are in fact lower than what they were. So it's not completely reflecting this whole investment theory. So I think the best way to play is indirectly through the corporate deleveraging cycle, and maybe some industrials, large industrials, which are not significantly overvalued. Just to name, for example, L&T, I don't think it is. I think the P is around 30 in their 30s. I think so. So I think that's a bellwether. I mean, it gets positively impacted from the overall CapEx cycle. So just to give an example, but the point is you have to dig through. But where the valuations are not significantly higher, those are spaces I think should be good to do. And I think the playing it through the lenders is better right now from a risk-reward basis.
Got it. Okay, we are out of time completely on this leg of Talking Point. We're not afraid we'll have to leave it at that. Very interesting note. Would I love to talk more, but time's up today. Thanks so much for taking the time out and being with us.
Thank you, Niraj. Always a pleasure.
Yep, likewise, and viewers, thanks for tuning in this edition of the Talking Point.
Markets off the day's high point, the Nifty trades flat and so does the Sensex, even though that retains the 78,000 mark. Banks see profit taking. Mazgaon Dow emerges as a top mid-cap gainer after the company gets added to the government's Navratan trinket. Stock surges as much as 4% in trade today. And a strong listing for D Development Engineers as a stock list at a 67% premium. It's a positive opening for Acme Fintrade as well. And Lok Sabha is all set to witness a rare election as K. Suresh takes on Om Birla for the Speaker post. Welcome welcome. You're watching the FNO show. The markets, after a strong performance yesterday, are trading flat as we see it in early minutes of trade this morning. The Nifty, though, after starting off negative, is actually trading with a marginal gain as we see it. The buying still not ebbing at this stage after a strong rally that was seen. 23,737 is what we have on the Nifty. The markets and bulls eyeing 24,000 for the June expiry. Bank Nifty, which was a star performer in trade yesterday, is seeing some amount of profit taking, which of course doesn't come in as a surprise after 52,000 got taken out on the index. Private sector banks like HDFC and ICICI Bank, which were stars of yesterday's trade, are seeing a little bit of consolidation in early trade this morning. Amongst the big movers on the Nifty 50, Bajaj Auto is down 2%. Hindalco Metals, remember, continue to see some weakness. Vedanta had a big block of about 4% in early minutes of trade, on back of which the stock was seeing some weakness, but it's recovered from the day's low point, at least in the way we see it. Apollo Hospitals also looking bad. So hospitals, metals are the weak spots in today's trade. On the Nifty 500, you've got a whole bunch of companies that are still looking okay in trade. Topping the list is India Cement. Not sure what's happening there, but the stock is up over 12% to be the top gainer on the Nifty 500, followed by Garden Reach, that after a strong up move yesterday is up another 10% in trade today. So whoever thought the defense rally was behind us would have to, of course, take a recheck to that this morning. Masgao Docs is up 5%. You've got Bharat Dynamics that's up 5%. So barring HAL, the whole pack across the defense space is looking good in today's session. Cement, along with India Cement, you've got JK Lakshmi as well, that's up 5%. 361 WAM is looking good. You've got the other few names like Ramco Cement as well that are trading with a 4% up move. Ultratech Cement also seeing a 4% gain. On the sell side, Craftsman Automation is down 4%. CE Infosystems, Sanghi are two counters, along with Vedanta that saw a block deal, are seeing pressure on back of those block deals. But like I said, Vedanta is well off the day's low point, trading with a cut of about 2.7% right now. So all in all, it's not a bad looking market. Some profit taking, but the breadth of the market not too bad, and the benchmark still very much in control of the bulls. Brijesh now joins in of IDBI Capital, Ajit Mishra of Religare Broking. Morning, gentlemen. Thanks a ton for joining in. Brijesh, I'll start with you. On the Nifty, it was a very strong move coming in on the index. So whoever thought that going short in the market was a wise decision would, of course, not be too pleased with what we've seen. From where we stand right now, fresh longs recommended on the Nifty?
Hi, morning. So basically the directional view on the index is positive. I believe that Nifty, the intermediate resistance was somewhere close to 23,500, which was very strongly taken out in the last two trading session. And I think Nifty is somewhere opening towards 24,000 mark. So I don't believe right now there would be any opportunity to take any short trades. Maybe till the expiry, maybe by end of this week, or maybe like in the first week of the coming week, I think there is a fair chances that we might go back to 24,000 level. So that's a directional view. Right now, 23,500. There are a lot of put writers who are giving the support for the Nifty as of now. But then same perspective for the Bank Nifty. I'm slightly cautious because purely from the expiry point of view, 52,500 is something I think slightly the put writers are exiting, or maybe their positions are getting unwinded. There are fair chances that today Bank Nifty might see a close below 52,500 mark. So slightly profit booking view is done on the Bank Nifty.
Right, Ajit, what would you do at 23,730 odd? The Nifty is looking comfortable. 24,000 possible before the end of the series, and even if not, a fresh long on the index could be initiated at these levels. Maybe not for the June series, but potentially for the July series.
Yeah, good morning, Samina. So, Samina, in fact, till yesterday, we were seeing that index was hovering in a band, broadly like 23,300 to 23,600. And intraday, yes, we penetrated both the levels, but on the closing basis, finally, we had this close of, decisive close above 23,600 in the last trading session. So, kind of price-wise, time-wise correction that we have already seen in the index, our view is definitely positive. Another important aspect, Samina, that banking and financials, which hold considerable weight, roughly around 40%, are showing noticeable sign of, buying interest across the board. So that gives us further comfort that, yes, this uptrend is here to stay. And 24,000 positionally is what we are eyeing next. And in case if somebody is looking for any fresh trade, I feel that any dip, 50, 60 points dip from the current level can be considered as a buying opportunity, with 23,580 being the stop for the positional target of 24,000 mark. Banking today, we are seeing Tesla around 52,500 zone, being the weekly expiry. So we might see some, volatility in the later half of the session. But overall, the private banking majors are indicating that the positive tone will continue with some consolidation, because we have already seen very strong surge across the private banking majors, be it HDFC, ICICI, and Axis. So the tone looks positive, and now we may see that the banking might take a breather, and IT and the other sectors would take the lead. So overall tone looks positive. It's a buy on dip market, with 24,000 being the positional target.
Right. You mentioned HDFC and ICICI Bank because those were the star trades yesterday. iBank is around 1,200, HDFC slightly below 1,700. Ajit, do you think initiating a fresh long year is warranted, or you'd avoid these counters and potentially look at maybe the PSU banks for now?
In fact, Samina, I would prefer the mid-cap banks, those who have not participated it yet. The stock like CUB, RBL Bank, Bandhan Bank, IndusInd Bank, Kotak. So some of these names which were slightly on the sidelines have started seeing traction after this recent up move in the private banking majors. PSUs only SBI, I feel comfortable with. Other like names like Bank of Baroda, Canara Bank, they are still not indicating any decisive, possibility of decisive move. So for a time being, the mid-cap banks are the preferred candidates in case if somebody is looking in the banking space.
Right. What about you, Brijesh? How do you feel about, I know you said that Bank Nifty may see some profit taking, but what about individual banks and HDFC and ICICI Bank? Both of them are muted this morning. No major profit taking has emerged just yet. And also in the PSU pack, do you feel like the next leg of the up move on Bank Nifty could be driven by public sector banks? And if yes, if you've got any picks there?
So I will go with Ajit's view. So my sense is that maybe the private banks which already rallied might see some sideways, or maybe some consolidation can be there. The move which we can expect would be from the mid-cap space. We do have a buy with the AU Small Finance and City Union Bank, and given this to some extent, Maharashtra Mahabank, which is also looking quite strong. So the overall. And from the PSU space, somehow the SBI and Bank of Baroda, even the Bank of Baroda, there is a lot of traction is there. So I think once this segment starts picking up, along with SBI, Bank of Baroda can also see some good amount of momentum. So definitely it would be more of a stock-specific approach, but then more than private banks, I believe mid-cap and PSU, first the mid-cap and then the PSU. This should be the leg of rally, what we should be seeing in the banking stock.
Right. Brijesh, let's start with your top stock recommendations on the long side or short side, or of course any options that you think are looking lucrative right now.
So basically, today the day is of a cement pack. So you name whatever, I think all the cement packs are looking good. India Cement has extremely given a very strong breakout. Though the stock is little bit on the higher side, I would wait for some kind of decline. When I say decline, it might not come today's trading session, but then whenever this India Cement come back to 250 level, I think that's a very good bet. One should take the long trade with the stop loss of 238 for the price target of 270. And one more position which we are keeping a watch on is the PVR Inox. This is one stock which was in the downtrend and slowly now turning up. The data for the next July series looks quite promising. So I think there is some not very aggressive big move, but definitely a trading opportunity is there in the PVR Inox. One should go along at the current price. The stop loss would be 1425 for the target of 1530.
India Cement and PVR Inox, you're right, Brijesh, there is no stopping India Cement. It started with a marginal gap up, but trading at the day's high point, over 13% higher on a day which is generally looking fairly quiet for the markets. Ajit, you want to take us through your stock picks?
Yes, certainly, Samina. So again, like banking, alongside with banking, now today we are seeing noticeable move in the cement space as well. So Ambuja Cement is the bet from the cement space which we like. Ramco, Grasim, they have already done well. So now I feel that after this consolidation, the stock is set for the next level of the up move, and 684 is something that we are eyeing. So with stop at 652, one can go long in Ambuja Cement. Another stock that we like is from the gas distribution space. So Gujarat Gas, after a phenomenal surge, witnessed a marginal retracement towards the short-term, support zone of the short-term moving averages, and formed a base followed which now we are seeing resumption of the trend. So this is also something that one can look for fresh longs, with 635 being the target and 605 stop.
Ajit, very quickly, a word on defense. They took a bit of a breather over the last couple of weeks, but back up in how? Garden Reach, after a sharp up move yesterday, continues to see further buying. So is BDL and so is Mazagon Dock. The only one that stands out on the non-performers, HAL. Do you feel like there's a trade on any of these counters? I know apart from maybe Mazagon Dock, none of these counters are in the F&O space, but just on the charts, any word on the defense names?
So in fact, Samina, like everybody was guessing the same, that after this phenomenal surge, there could be some consolidation. But in some of these names like Garden Reach and Mazagon, we are still seeing this positive momentum continuing. So stocks which are in the F&O basket, they are basically taking a beater. So stock like BEL is slightly on the sideline, then HAL is also witnessing a similar move. I feel that one needs to be selective, and within this space, BDL looks very positive to us because it's almost like a month-long consolidation the stock has already spent. And the good part is that we have a very strong base around the short-term averages, which is placed around 1540 mark. So among all these names, we feel that there's a possibility of fresh up move in BDL in days to come. So in case somebody is looking for any trade purely in the defense space, with stop at 1540, one can go long in BDL for 1722, 1750 being the positional target.
Right. Brijesh, two stocks for you that were that happened in the radar of a lot of contra traders in that sense. One has been Zomato. Very sharp up move after taking a very long break since its earnings was Zomato, which saw a rally yesterday. This morning it's down about 3%. How do you trade a Zomato? And what about Vodafone? It's been pretty much a one-way journey from 14 to 17, 17 and a half right now. Either of these counters that still look good on the long side?
Yeah, so basically Zomato, I believe it's the last couple of days, there's a lot of people are now getting attracted to the Zomato. Maybe whatever the, technically if I need to look at, there's a small rounding kind of a structure, which talks about 215, 220 level on the higher side. So we are seeing that maybe not from the very too long term, from the very positional bet, but from the trading perspective, who can take that stop, who can follow the stop loss, can make an entry in Zomato at this price, 197. Today, the stock is already corrected. The maximum correction, which I can see, the support is somewhere close to 190 level. So anybody who can take that stop loss of below 190, 180 or something like that, can take that 10 points risk, can play about 15, 20 points on the higher side. Not too much on the higher side, 215, 220, that would be the band. So somebody wants to play for this move, I think there is an opportunity. And today again, the stock is down by 5 points. So again, the entry point can be a good thing. Same thing with the idea, not too much of positive, but then structurally the stock is moving. So one has to ride this momentum. The people who already have bought the position, I believe 22, 23 is the level can be seen. But can we buy for that 22, 23 at this price? No, we are not recommending any buy at this point. Somebody is having a position should ride the momentum. Maybe 22, 23 is possible, but not too much of like recommendation on this.
Ajit, if I had to ask you for one intraday trade, what would it be?
Samina, I have just recommended ICICI Pru to our clients. In fact, the life insurance counters have started seeing traction since yesterday, and we are seeing the continuation of the move. So ICICI Pru has basically witnessed a fresh breakout from the intraday range, and 630 is something that we are eyeing. So with stop at 600, one can look for fresh long in ICICI.
Looking good. It's a day's high point. 613 is what we have. 630 is the target that Ajit is sharing with us. Thank you, gentlemen. Great having both of you on the show. We'll take a break. We'll come back. We'll put the focus on commodities and tell you what's happening in that space. So stay tuned.